गुड आफ्टरनून टू ऑल. इट्स माई इंडीड प्रिविलेज कि मैं धनंजय सर का इंट्रोडक्शन दे रहा हूँ, क्योंकि यहाँ पे कुछ आर्टिकल्स और ट्रेनीज भी हैं. इन द ईयर ऑफ 2005-2004 मैं ऐसे ही आर्टिकल की तरह यहाँ पे बैठता था और धनंजय सर को सुनता था. आज मुझे ये सौभाग्य प्राप्त हुआ है कि सर का मैं इंट्रोडक्शन दे रहा हूँ, क्योंकि कंटिन्यूसली सिंस 20 ईयर्स और मोर उनका जो बैटिंग चल रहा है दैट इज़ अनपैरेलल, अनप्रेसिडेंट. क्योंकि जिस हिसाब से उनका जो एनर्जी है, द नॉलेज ही पजेसेस, आई थिंक हमारे प्रोफेशन के अंदर बहुत चुनिंदा लोग होंगे कि जिनके पास इतने वास्ट एक्सपीरियंस और डिटेल्ड नॉलेज है. मैं उनके साथ एक अभी की ही बात कर रहा हूँ. मैं उनके इंट्रोडक्शन जो मुझे दिया गया है वो बताने से अच्छा है कि उनकी कुछ खासियतें बताना चाहूँगा. जस्ट मैं उनके साथ अभी डिस्कशन कर रहा था. मैं अभी थोड़ा एआई पे काम कर रहा हूँ, तो सर ने मुझे 3-4 इंसाइट्स ऐसे दिए कि जहाँ पे रियल में बैंक को जो घाटा हो रहा है, यानी कि रेवेन्यू लीकेज हो रहा है, वो हम कैसे एआई को यूज़ करके बैंक को सरपास कर सके. ऐसे 2-3 आइडिया मुझे उनके पास से भी मिले भी हैं. और जिस हिसाब से सर की जो सिंप्लिसिटी है कि सर जो चीज़ों को एकदम स्लोली जो सरपास कर सकते हैं, आई कैन से दैट कि उनके पास इतने सालों का एक्सपीरियंस है, इसी के कारण ये सब कुछ हो रहा है. हम आज IRAC नॉर्म के बारे में उनके पास से सुनेंगे सर के पास. IRAC नॉर्म के अंदर बहुत डिटेल्ड है और स्पेसिफिकली फॉर द पर्पस ऑफ अर्बन कोऑपरेटिव बैंक, जैसे गोपाल धक्कन जी ने भी हमें बताया कि नेशनलाइज बैंक है, RRBs है और अर्बन कोऑपरेटिव बैंक्स है. सबके अंदर IRAC नॉर्म्स है, मगर माइनर चेंजेस के साथ, 10 to 20% चेंजेस के साथ है. अगर हमें अर्बन कोऑपरेटिव बैंक के अंदर स्टैट्यूटरी ऑडिट करना है तो ये जो भी छोटे छोटे पैरामीटर्स हैं हमको ध्यान रखने हैं. वहाँ पे नेशनलाइज और जो RRBs यानी कि जो भी दूसरे IRAC के नॉर्म्स है वो यहाँ पे हमें ध्यान नहीं रखने हैं. आई थिंक दूसरा सर के बारे में बताना चाहूँ तो सर RBI, नाबार्ड अपने इंस्टीट्यूट के गाइडेंस नोट जो भी हैं उसके अंदर सर रेगुलर स्पीकर भी हैं और राइटर भी हैं. सर फॉरेंसिक ऑडिट भी करते हैं और सर के पास मेरे जैसे हजारों आर्टिकल्स और CS काम कर चुके होंगे. सर विद दिस ब्रीफ इंट्रोडक्शन आई वेलकम सर धनंजय गोखले विथ ह्यूज राउंड ऑफ क्लॉज. मैं उनके लिए मोमेंटो के लिए बोलूँगा. सर ये वो क्या बोलते हैं, पूरा स्क्रिप्ट नहीं था, तो अगर मेरे से कुछ भूल चूक हो गई हो तो माफ़ कर देना. सर नाउ द फ्लोर इज़ योर्स. थैंक यू सो मच सर.
Good afternoon to all of you, and my sincere thanks to Ahmedabad branch, especially Kapil ji. In fact, I was not aware that he was listening to me for so long, and I think we should appreciate him that he's able to still listen to me, because sometimes it becomes a kind of a repetition. But as far as Ahmedabad branch is concerned, many a times I've taken some extra privileges of speaking out more vocally. So I will continue to do that, and I understand that this is a kind of a combination of bankers as well as chartered accountants. So it might appear that I am speaking some things which are not in favor of banks actually per se, but I might be talking about certain banking practices and how the audit changes the scope and the role of auditor. What I have done is that I have divided session into two parts. First is about the verification of advances. Typical things which I will just like to highlight, but it is more of kind of a refresher thing, because as far as credit portfolio is concerned or credit appraisal is concerned, actually I always believe that it's a banker's prerogative. The reason being, the auditor can only object on couple of things, like say documentation, or maybe lacunas in credit appraisal to the extent that it is deviating from the credit policy of the bank. But as far as the sanctioning part is concerned, it's always presumed to be the prerogative of the bank. And my personal view is that auditor should not question the bank as to why a particular loan is sanctioned. That is something which is the bank's own business. Only thing is that the auditor has to ensure that there is no regulatory violation, there is no internal policy violation which has really occurred. And if these two parameters are met, practically the auditor should not go beyond that. But let me remind you of a couple of things before I start off with this presentation. Recently there was a disciplinary committee case. Probably few of you might have been received that on WhatsApp. It's a 30 or 32 pages document wherein a concurrent auditor of a bank has been held responsible for not identifying a fraud at that particular branch. Now this is something which is very ticklish, and why I am specifying that in opening remark is, as an auditor, the moment you have decided that you are willing to do a bank audit, there is a kind of additional risk which you are presumed to have perceived. So never forget that risk which you are undertaking, whether you are doing a concurrent audit or whether you are doing a statutory audit. The chances are that maybe after a couple of years, someone might realize that there was a fraud in your tenure. What you need to ensure is that your documentation process should be so perfect that you should be able to prove using your documentation that you have taken due care to ensure that there is no apparent fraud which is available, prima facie in any of the bank. If you are not able to prove that, then you need to face the music. Face the music in the sense DC is not a music player actually. And let me tell you one more thing. As far as urban cooperative banks are concerned, many of you may not be aware, but UCB's cases are picked up by QRB. Those of you who are CS, they are aware that FRRB and QRB, those are quality control mechanisms from the institute side. As far as FRRB is concerned, typically the listed entity cases are picked up. As far as QRB is concerned, these are typically unlisted entities wherein public money is involved. So UCB exactly fits into that. And as far as QRB process is concerned, unlike peer review process, it's altogether different process. Wherein suppose you have signed off a balance sheet of a UCB, practically you have to prove before the QRB reviewer how you have performed your duty as an auditor in compliance with standards on auditing, how you have verified that all the accounting standards are complied by the bank or not, and whether you have reported everything the way you were expected to report. And the way you expected to report is something which is too subjective. So just keep these things in mind whenever you are accepting audit. I am not saying that you should not do the audit. I will never say that you should not do the audit. But wherever you are doing the audit, once you accept the assignment, irrespective of the fees, whether you are getting fees of 1 lakh or 1 crore, your benchmark of quality of audit has to be same. You cannot undermine the benchmark that I am getting only 1 lakh fee, so I will have a lower quality of audit. There is nothing like a light version of audit. So once you sign off the statutory audit, it's same, whether you are signing a listed entity, whether you are signing a proprietorship firm, or whether you are signing a UCB. So I just thought to wake you up, because it's a postland session. So I understand that it's a natural thing to happen that few of you might doze off, especially those who are sitting at the back. And frankly speaking, this auditorium is so large that the speaker cannot look beyond a particular point. Only speaker can sense that there are few people who are sitting in dark for obvious reasons. And if someone is not sitting too idle, without even slightly moving here and there, then you can understand that he's having so high level of concentration that his entire mind, body, everything is focused towards the speaker. Throughout the session, if anything is there which you want to express based on your own experiences, wherever you feel that whatever I am talking is not really in sync with your presumptions, you can just interrupt me in between. Also, wherever if you feel that I want to elaborate, you want me to elaborate something more, just interrupt me in between. Let it be a dialogue actually rather than a monologue. And those of you who are doing articleship, just one piece of suggestion, that try to presume that you are in the role of the partner and presume that you are going to sign the balance sheet. Then your actual work will be substantially of a different nature, because typically the articleship period is always an enjoyable period in various sense. except one point that you need to understand that now your articleship period itself has been reduced from 3 years to 2 years. So it's like, squeezing the course. So you have little time left to learn the things. Once you finish off the articleship, practically you cannot tell someone that you don't know something. Everyone presumes that once you are a CA, you are aware about everything. Whether you are aware about not or that, that's a different thing. Just to give a comparable example, whenever, any speaker speaks actually, he has to presume that he knows more than the audience. And the audience presumes the other way around, so it's something like that actually. So this is just a disclaimer actually, that whatever I will be speaking, they are purely my personal views, not professional views. So I can take certain liberties to talk about certain things. So let's start with audit of advances. I will briefly cover audit of advances. I will not go into detail because it's a kind of a routine thing nowadays, but I will just like to touch upon certain things. This is a list of master directions which have got issued on 20th November 2025, and frankly speaking, all of us actually need to revisit all those master directions. Almost 27-28 master directions are issued based on type of bank. So for every set of bank, there is a different master direction which has got issued. The nomenclatures of master directions have undergone a change. So like earlier it was a exposure related circular was there. Now it is credit risk. So management of advances circular also has undergone a change in the nomenclature. So you have to just ensure that you are aware about which circular is changing the name, and secondly, what are the contents are there in the particular circular. Because now the structure of master direction has also undergone a change. So first we'll deal with balance sheet disclosures, and one by one I will try to focus on a couple of points. I will be sharing the entire presentation, so no need to click any of the slide. The entire presentation as it is will be shared with all of you. So don't worry about that part. That you have missed out clicking on something. Don't even think about that. Now, as far as balance sheet disclosure is concerned, as an auditor or as a banker, you need to be aware about as to what kind of disclosures are required in two forms. One is what is the balance sheet format which the bank is supposed to follow, and secondly, there are additional disclosure norms which are specified in disclosure norm master direction. Now, first let me touch upon the format of balance sheet, because that's where the disclosure is. As far as UCBs are concerned, they have to follow section 56 ZL format, which is a horizontal format and not the vertical format. So if a bank is following a vertical format, it's in contravention with IRAC, it's a regulatory violation. As an auditor, you need to be aware about that. And secondly, if you look at the format, there is a principal difference between commercial bank format and UCB's format. UCB format is typically everything is disclosed on the face of balance sheet. There is no scheduling concept. As far as scheduled commercial banks are concerned, one is it's a vertical format, and secondly it has only line items and everything is there in the schedules. So scheduling concept is not applicable to UCBs. So for example, if you talk about advances, the breakup between the advances like say CCOD, secured, unsecured, term loan, all those breakup are there on the face of balance sheet. So wherever you are doing statutory audit, first thing is that open the BR Act, just look at the format and compare the last annual report. If there is a deviation, ask the bank to rectify it at least in March 26. So maybe certain regrouping or certain changes in disclosure will be required to be done. Another thing is that there is no rounding off which is permitted for UCBs. Full figures are required to be given to UCBs. So that is another common mistake which typically happens. Now as far as other disclosure norms are concerned, which are defined in master direction, the typical instances related to that are, firstly, as far as the concentration concept is concerned, top 20 advances are required to be disclosed. That is, top 20 borrowers are required to be disclosed, and not top 20 accounts. So you need to be very clear about what it really means. It's not about sanction limit and other things. It's about the exposure which the bank has taken. Now you need to understand as to which figure the bank is supposed to report, and you need to be very clear about single borrower exposure limits and group borrower exposure limits also. As far as disclosure is concerned, when we talk about top 20 borrowers, it means that you need to disclose whatever is the outstanding balance is there, and out of top 20 you have to disclose those things. So for example, if you have certain loans which are in joint name, so let me just touch upon the the critical subjects. Let's take an example. You have multiple loans in the name of A, and you have few loans which are a joint loan wherein A is a joint borrower or a co-borrower. Now you need to be conceptually clear as to whether that loan will be included in that A's exposure or not. Because when you are calculating top 20, you need to be very clear about what kind of exposure you are talking about. So any joint loan which is there, that tantamounts to the exposure to that individual also. So just to give an example, suppose say 5 loans are there in the name of A, 3 loans are there in a joint name, say AB, AC, AD, or maybe DA, BA, anything in any combination. Even that will get counted, because co-borrowers are jointly and severally liable for repayment to the bank. So ensure that how the bank is ensuring that all these things are taken care of. Of course, guarantor's liability is never counted for exposure, it's only direct liability. Another disclosure is that top 20 NPA accounts are disclosed. Same logic will apply for NPAs. It's not account, it's borrower. So you need to ensure that what is the concentration risk related to those NPAs. And as an auditor, you need to make an analysis about what is the quantum of top 20 depositors, borrowers and NPAs. That will give you a clear-cut idea as to what has gone wrong with the bank or what is likely to go wrong with the bank. Typically based on concentration of advances and concentration of NPAs. Then let's come to types of advances. Typically advances types which are there. So typically if you look at any balance sheet, you can broadly classify advances into 2 parts, funded, non-funded. As far as funded are concerned, again subdivision will be there in case of term loan, working capital finance and bill discounting facilities. So these are broad categories. Internally, I will just disclose few of the type of advances. Nomenclature might change, but type of advances has to be clearly indicated. Similarly, for non-funded base, it will be LC, BG, buyer's credit, wherein the banks are issuing a letter of comfort. In cooperative sector, you might have corresponding bank arrangements, wherein the LC might be issued by say some nationalized banks, and UCBs per se are giving guarantee to that particular nationalized banks. So all these things will also get included. So if you look at the entire gamut of banking, there is a double counting to that extent. Because the nationalized banks will be also including that as a LCBG exposure on them, that is which they have taken. UCB will also say that there is an exposure taken on that particular borrower, in the sense non-fund based exposure. So there is a double counting, but there is a reason for that. Now where the ticklish points are. Now whenever you are looking at any balance sheet, you need to understand that what type of product the bank is dealing with. So let me give an example where some mixing up is done by a couple of banks. Typically it is not common in UCBs, but it is very common in private sector and public sector banks. And many times, the bad habits are quickly picked up. And, good habits are rarely picked up. So let me give you an example. There is a product which you are aware about, that in case of housing loan, some banks are having a product wherein it is a drop line OD and not the real term loan. Now drop line OD, what it indicates is that over the period, let's say suppose the period is 15 years, over 15 years, your outstanding limit or outstanding balance is there that will get compared with the drop line limits. So your limit will gradually, will be declining. Maybe suppose it is 180, installments are there or 180 months are there. So your limit will be divided by 180 and every month to that extent limit will be reduced. At the same time, checkbook will be issued to the borrower. So borrower can deposit lump sum amount in that particular account and can withdraw that amount also to the extent of that outstanding limit or, the applicable limit. Now the challenge over here is such facilities are required to be classified under CCOD facilities and not under housing loan facilities. But brochures and all other product related document will indicate that it's a housing loan. Now why this is important? It is important from 2 aspects. One is about the disclosure part, that you have to disclose that as a working capital finance that is under CCOD, not under term loan. Second thing is that since you are issuing a checkbook, it indicates that it's a drawable limit. You can again draw back that particular amount. So any limit wherein there is a drawability, that typically will fall under CCOD. Nomenclature can be anything, you don't have to worry about the nomenclature. Now what is next actually is that when you apply the IRAC norms related to out of order, which are related to CCOD, those should be applied. And term loan related IRAC norms will not apply. So just verify as to each of the product, which is offered by the bank, whether that product offering is rightly, categorized or not. Let me give one more example, which is very common amongst UCBs, more particularly. All of you are well versed with gold loans. Yeah. Can anyone tell me that in how many cases of gold loans you have really seen that end use is specified in the application letter or application form or maybe in the sanction letter, and the bank really has proof on record, that for so and so purpose, this particular loan is utilized? Very rare case. Now you tell me one thing, can a bank sanction a loan without having an end use? Ideally no, because then it can be used for any purpose. Now only good part about gold loan from banker side is that RBI has given a relaxation last year, if all of you are aware about that. That practically RBI has allowed the banks to do a evergreening. So the borrower has to simply pay the interest and the loan can be rolled over. So a very favorite query for the auditors actually on year basis, that so many gold loans are rolled over without repayment, so the account should be marked as NPA and evergreening. That query will not be there now. Now what is the challenge over there? Earlier also there were few banks who were innovative. What they did actually, as all of you are aware, there was a restriction on how much period a gold loan can be sanctioned. And bullet repayment also, there was a specific definition. Now what was the definition of bullet repayment of gold loan? That whenever the repayment terms specify that principal as well as interest will be paid at the end of 12 months, it was called as a bullet repayment thing. And there was a restriction on upper cap and other things, in earlier guidelines. Now what the banks were doing, they were very innovative, and banks are always innovative. I sincerely believe that all banks are innovative in a good way, not in a very bad way. Means I am on I am on banker side. You have to presume that. So what was the innovative practice? Few banks, what they did, they gave a bullet repayment loan, but interest was payable as and when, or maybe quarterly. Now the moment you do that, the loan gets out of the ambit of bullet repayment loan. So the upper cap and everything is not applicable. So that was one escape route. There was another escape route. There were few banks who gave OD facility against gold, because that was not prohibited. Underlying security was gold. End use was vaguely defined. It is used for business purpose, or it was used for personal use. Now personal use is a very strange kind of nomenclature. But loans were given. And probably, RBI probably got fed up with all the queries. So ultimately now they are allowed that you do whatever you want to do. You roll over, you renew, everything you can do with a condition that interest has to be paid by that particular borrower. Now I am giving this example over here. Wherever gold loans are there, ask yourself a question, whether you are a banker or the auditor, what is the end use and what is the type of product which the bank has offered? Whether it is a OD, whether it is a bullet repayment loan, or whether it is some kind of personal consumption loan is there, because depending upon that the categorization will change. Now going little further actually beyond this, all the banks are having priority sector targets. There are many banks actually, what they do is for gold loans, they presume that it is a small value loan also, and they presume that it is a priority sector loan, under the presumption that it is going to be used for the business purpose. Now the underlying requirement for any priority sector lending is that you have to use that for business. Business should be MSME, and then only you can say that there is a real use for purpose which is defined for priority sector. Now sometimes on paper there is a priority sector lending, but in reality the loan might have been disbursed in the form of disbursement to saving account. So nomenclature is proprietorship, end use is in the credit in the saving account, then cash is drawn, and then whenever the installment is due, the amount gets repaid back. As an auditor, you need to be vigilant about how priority sector lending categorization is done, whether bank is having internal control mechanism to ensure that correct priority sector lending guidelines are followed or not. Now as an auditor, you need to be also aware or rather worried about another thing. All of you have done certification for UCBs. There is one certificate, wherein PSL lending certificate is there. It talks about quarterly figures, the quarterly targets, which the bank has achieved. And many a times on quarter basis, category of borrower might change. Maybe in first 2 quarters he might be MSME, later on he might get out of that, or vice versa also. You need to be well aware about how to identify MSME accounts, what kind of internal control mechanism the bank has. If you are satisfied, then only you are supposed to certify. If you are not satisfied, you have to qualify your certification. So just keep these things in mind. So let's come back to the slide. Now as far as advances against securities are concerned, be aware that there are certain securities which are prohibited securities. Just to give an example, as far as advance against equity shares are concerned or equity oriented mutual funds are concerned, that is a prohibited category. One more thing is that as far as certain end use are concerned, even end use are, certain prohibited categories are there. Let me give you one example. Earlier, actually, prior to this, relaxation in gold loan policy or gold loan circular, the earlier guidelines were stating that UCBs were prohibited from giving funds for purchase of gold and silver. So that was a categoric prohibition. So what it means is, UCBs were not allowed to give CCOD facility to jewelers. Because the moment you give working capital facility, there will be at least 1 or 2 entries wherein gold is purchased. So that was prohibited. But if you introspect, bankers as well as auditors, jeweler loans were very much there in most of the UCBs. Whether the value was 50,000 or 50 lakhs, that was not the question. But the violation was there. Now RBI came out with a guideline wherein the bigger banks, tier 4 banks are allowed actually now to give working capital finance for purchase of gold and silver. Now one more thing which RBI has silently done. The biggest issue in this master direction is that there is no comparison with earlier circular of master circular and master direction. So one change which has occurred is all gold related regulatory norms were there. Now they are applicable to gold and silver. Because silver is now also a precious metal, which earlier was supposed to be comparatively of a lower standard. So for gold as well as silver, whatever I was talking about, everything gets applicable. So again, to come back, because I believe that there are very few tier 4 banks are there in Gujarat. So for rest of the UCBs, revisit the circular, see that whether you are already contravened to any of the regulatory norm or not. If the answer is yes, the easier way is to exit out of all those borrowers before RBI points it out. Because it's a very easy thing to point out about jeweler loan. You have to just take a dump, use Control F, because typically the nomenclatures will include the name jeweler, jewelry, something of that sort, and you can easily find it out. Then let's come to a couple of commonly used terminologies. I have just listed down few of the terminologies. I presume that most of the things are you are aware about that. I want to touch upon certain things. As far as primary and collateral security is concerned, when you talk about secured unsecured bifurcation, you have to take into account primary as well as collateral. When you are talking about drawing power calculation, you have to focus only on primary security. So that is a relevance and a correlation between primary and collateral. Now let me tell you how the bank can play around with collateral and primary. So let's presume that there is a CC facility. So the primary security is stock and book debts. Bank has taken a collateral security in the form of immovable property. A very common case actually. Now the borrower is running short of drawing power. Maybe because of adamant auditor who is insisting that trade credit should be entirely reduced. So because of that it has resulted into a tricky scenario. What the bank will do? Bank will change that collateral security nomenclature or status of that security from collateral to primary. So what really happens is now primary security is both stock and book debts plus immovable property, maybe at a higher margin of say 50%. Doesn't matter. But typically in most of the cooperative banks, the collateral security is taken more than the limit which is sanctioned. So if you combine both these things, the purpose is served. Now what you need to do as an auditor? First and foremost thing is that wherever there is an interplay between primary and collateral, on the date of converting collateral into primary security, if there is no sufficient drawing power is available, it amounts to a restructuring process. The reason being the bank is indirectly accommodating the borrower because it was already overdrawn. Now if you accommodate a overdrawn limit, practically you are kind of camouflaging the things and it becomes a restructuring process. That is first thing. Now what is the remedy? Because all the bankers are here, so I need to tell the remedy also. The remedy is that you need to tell the borrower to reduce his outstanding balance, bring it within the drawing power, wait for a couple of days, then sanction the limit. Now why I am giving you both these solutions is that, not that the bank should be doing that, because the biggest challenge later on is that the bank should be having adequate mechanism to monitor these accounts. Because gradually, then the borrower becomes habitual not to submit the stock statement. He keeps on saying that even if stock statement DP is 0, I am having a DP of OD against property. So forget about my stock and book debts. And that's where the typical monitoring error happens. Because the bank is not subsequently become unaware about the quantum of transaction, the moment of stock and book debts, and all of a sudden they realize that unit is already closed. Because there is no more stock statements which are getting really submitted to the bank. So be aware about pros and cons of all these. I should not be saying that it's accommodation. From bankers, dictionary, I should say that it is a practical banking. From auditor's point of view, I can say that bank is indirectly accommodating, the borrower. Another thing is that joint borrower, co-borrower, both concepts are same. What it really means is, see, wherever any loan is given in the joint name, both are equally responsible. Now, what are the repercussions of that? One repercussion is that the moment any loan which is having, say, a joint borrower becomes NPA, all individual exposures of both will become also NPA. So, suppose AB is the housing loan. Naturally, A's all loans, B's all loan will also turn into NPA. And wherever A and B are co-borrowers, whether it is a first name or a second name or a third name, the moment they are co-borrower, even that account will turn into NPA. So, C, B, D, A, all these accounts are also turning into NPA. So, always remember this thing, that you need to test the CBS system as to whether the CBS system is robust enough to understand these peculiarities about the joint loan. And most important thing is that there are some age-old CBS systems are there which are still prevalent in UCBs, which don't categorize between A and B. So they have only one nomenclature. So in the name only they write A and B. So it's a unique customer ID which gets created. So you have a custody for A and B, you have a custody for A, you have a custody for B. Now if that is the case, it's a clear-cut violation of UCIC. Acquaint yourself about how the CBS system is behaving, because typically based on that you need to be able to correlate that about whether the disclosures and asset classification norms are correctly followed or not. Another thing is that you need to be very clear about what is a related party, and the new concept which has been initiated in credit risk master direction is about a reciprocally related party. Now as far as UCBs are concerned, what is meant by related party is that typically what we understand by accounting standard of related party, same concept is applicable to related parties related to directors of the bank. Now what is required to be done by the UCBs? On an annual basis, they need to take an undertaking from the director that who are your related parties. What the bank should do, irrespective of whether that related party is bank's customer or not, they should ideally create a custody, maybe a dormant custody, but they need to capture the PAN. So that in future actually, if any exposure is taken on the related party, the custody is already present, so there need not be any second verification which is required. So that is an easier way to monitor that whether any related party exposure exists or not. So that is first thing. Second thing is about a reciprocally related party. Now what this concept means, like suppose I am say bank A, so my directors related parties is one definition. In addition to that, even the reciprocally related party are also related parties. So what it includes is, suppose there is a bank B which is a UCB. So B's directors related parties will become A's reciprocally related parties. So I'll again repeat, I am bank A. So for me, reciprocally related party means directors of any other UCB and their relatives, and of course their controlled entities and other things. Now what is the condition which RBI has put in? RBI has given a relaxation now. Earlier there was a restriction, what kind of loans can be sanctioned to directors and relatives. So typically only two types were permitted. One is advance against deposit, second was advance against NSCs, wherein there is no NPA barring, so that was a typical thing. Now what RBI has done? RBI has given relaxation to these norms. What they are stating, for a related party, which includes reciprocally related party, there are hierarchies which are given, which start tier 1, tier 2, tier 3, tier 4 banks. It starts from 10 lakh and I think the last one is 1 crore. Now if your exposure to related party is more than that cap, then the board should not give that delegated powers to the lower authorities. So for example, if I am tier 1 bank, 10 lakhs is the cap. So if I am having an exposure on the related party of say 5 lakhs, then whoever is the delegated authority hierarchy is there, they can sanction the loan. The moment it goes above 10 lakhs, the entire proposal has to be sanctioned by the board. Now the challenge before the board indirectly is that the board becomes responsible for any act related to these related party exposures. Now as an auditor, you need to be aware about what kind of control mechanism the bank has devised to consider that whether a particular borrower is related party or reciprocally related party, because the challenge is there is no centralized database which gives you the data about who is a director or a relative of a director in other bank. So it will be purely based on the declaration as of now, unless and until some central registry is maintained. But as an auditor, you need to be aware about these guidelines. And while defining your audit scope or audit planning, you need to ensure that you are verifying this control mechanism within the bank. If the bank doesn't have control, the job of auditor is comparatively simpler. He has to only give a negative comment by saying that there is no identification process. Now, one more thing actually, when I am giving you all these examples, keep one thing in mind as an auditor. Wherever a master direction is not followed, it becomes a regulatory violation. Now, there is a repercussion of that. If you have seen SA 700 format, the last para is about the regulatory part. Any regulatory violations are there. So, BR Act violation, State Act violation, Multi-State Cooperative Act violation, and any master direction violation will be required to be stated on face of your audit report. So, I will give a very simple example, comparatively simple example. Suppose a bank has not achieved priority sector lending targets. Can you say that it is a regulatory violation? What is your view? Non-achievement of PSL is very common. Nothing special about that. It's an accepted fact now. Can you say that it's a regulatory violation? It's a violation. Now, all the auditors who are sitting over here, just introspect whether you have qualified your report under that regulatory para in March 25 or not. It's very likely that you might not have done that. In the current year, at least just ensure that if there is a violation which you are aware about, of course, you need to state that. So, I just give you a very simple yardstick. At the end, I will give you the hardest yardstick about where the regulatory violation is, especially about the BR Act. But let's keep it at the end. Next one is about sole banking arrangement, consortium arrangement. You need to be aware about what is the concept, and especially about the multiple banking. As an auditor, you need to be little vigilant about. Now, vigilant about what? You need to ensure that there is no probable double financing which has occurred. Because typically in multiple banking facilities, there are different ways to give lending. I will give a simple example. Let's presume that there is a dealer in say passenger vehicles, say Maruti dealer. Now there is a possibility that that dealer is availing a working capital finance from a UCB. At the same time, there is a supplier's credit which is also provided to him. And for supplier's credit, it's purely unsecured facility. So there is no charge which is created anywhere. But from the conduct of account, you can identify, that it's a supplier's credit. There are entries from NBFCs and private sector banks. So you need to analyze the account statement to understand that, or to analyze that whether there is a double finance or not. So multiple banking is something wherein you need to be little careful about. Now, how to identify that? Easier way is that typically through CIBIL reports, you should be able to identify that. That is one litmus test. Secondly, you can verify the statement of account and see the type of transactions which have been undertaken, typically with the financing companies or financial entities. So that is the easier way to identify these things. Then let's come to the appraisal part. Typical issues related appraisal part. Now, as far as advances processing is concerned, it will start from application form. So irrespective of type of advance, there has to be application form. A loan application form has to be there, and basic things are at least required to be captured. Now, basic what I am saying is name of the borrower, underlying security details, end use of that particular loan, and fourth thing is typically the income and other details of the borrower. These are the basic things which are there. Now, in many banks actually what is found is there are certain types of loans wherein certain details are absent. So let me give you an example, or rather I want an answer from you. As far as advance against deposit is concerned, is end use required to be specified? It's a very common product. So for any loan, ideally the end use is required. Or let me give you a exceptional example. Suppose there is advance against security, advance against FDs of the bank, and those funds are used for the purpose of horse trading, or a race, horse race, I should say. Is it allowed? So end use should be required to be there. Okay. Now let me ask you another question. All of you are well versed with priority sector guidelines. on a fair basis. I am not asking a pinpointed question. Advance against deposit, should it be a priority sector lending, or it should be out of that? Is it a priority sector or non-priority sector? Priority? Non-priority. Okay, let me give you an example. Suppose a CA firm is having say 50 lakh rupees as a deposit, and they have held OD against that fixed deposit. Is it a priority sector lending? Okay, let me ask you another question. As a CA firm, if you avail of any loan from the bank, is it a priority sector lending? I am asking about you only now. No? All of you are having MSME registrations? Most of you? Udyam Aadhar, all of you are having? So once Udyam Aadhar is there, if I am using any funds, which I am borrowing from any bank, that becomes a priority sector. Am I right? So loan availed from by CA firms is a priority sector lending. All of you agree? Or still you feel that you are non-priority? At least you should be confident about your own loans. And you should avail, maybe a concession rate, because you are priority sector. Okay, let me, ask you one offbeat question. All of you are aware about Mudra loan? Can you tell me whether CA firm fits into that? I am asking very simple question. Why you are so, so worried actually to answer that? I am not asking you whether you are availed Mudra loan or not. My question was that whether you are eligible. Or I should presume that you don't require any loan. Fees bahut aata hai. All of you are requiring working capital finance in real sense. Whether you finance or whether the bank is financing, that is different. All of us are having working capital gap. Now don't tell me that all your clients are so punctual in payment that within say 15 days you receive everything. If any one of you is claiming that, actually I will literally ask him to come over here. Now understand the concept of priority sector lending. It has no embargo actually. It depends upon what is the nature of business, whether it is registered under MSME or not. All these are supplementary things. CA firm very well fall under MSME. It's a very rare case that you go out of MSME definition. If that is the case, you would not have been sitting over here. If your size is so high. Okay, so now coming back to the point. So in application form, see that whether it is completely filled up. Also see that there is no reference which is made in the application form that referred by so and so director's name. That is prohibited. In do's and don'ts, and now the nomenclature has changed. Now it's a governance master direction. Any referral by director is prohibited. Now there are few banks who which are innovative. As I said that I always admire the banks for innovations. What they do actually, the referred by clause is now removed. Multiple years back, but they want to keep a track that which director has really referred to that. So they write it by pencil, maybe at the back side or maybe at the front side of that. So that if the borrower goes bad, then they catch hold of the director to go after him and recover the amount. So if this is the practice which, if you can see this practice, better that you alert the bank that it's a violation. You might get caught on the wrong foot, and the director will be in trouble, not the bank, not the auditor. Because the moment you write something, scribble in pencil also, sometimes even the director may not be aware. So wherever you interact with the directors, and if such practice is found out, alert them that this is a wrong practice. This practice is not supposed to be there. Then there are certain documents which are supposed to be accompanied with the application form. So ensure that the required documentation are there with the application form, and then only the appraisal of that loan is done. Now where the auditor can raise a objection is that if appraisal is done without this basic documentation, like financial statement is not there, ITR is not there, but the appraisal is done. That's where the lacunas in appraisal can be pointed out by the auditor. Now let me take you an extreme case. Suppose there are no documents available on the record and the loan is sanctioned. Will you say that the loan is performing or non-performing? Can you call such accounts as NPA? So there is no appraisal practically. No document is there. loan is sanctioned, documentation is correct. Sanction letter is there, acceptance is there, documents are executed, disbursement is done. Should we mark this account as NPA? How will you deal with this, such cases? See, the answer is, you cannot mark an account as NPA purely based on credit appraisal lacunas. It's a LFAR point. It's a lack of internal control. But actual conduct of account is the one which you need to see, whether the account should be PA or NPA. Another example, suppose documents are not executed, but the loan is disbursed. Can you say that it is a NPA account? Again, the answer is no. It's lacuna in documentation. Unless and until you feel that there is something suspicious, something fraudulent which has occurred, then you can raise an alarm, but not otherwise. Otherwise, it's a LFAR point. You cannot put it, as category for, a reason for marking an account as NPA. Then, as far as appraisal process is concerned, KYC compliance of borrower is also required. So all the re-KYC norms are equally applicable to the borrowers. Many times the banks are having re-KYC application or re-KYC process is followed for deposit accounts, and for borrower accounts many times the re-KYC process is not followed for various reasons. Sometimes they feel that the risk categorization has to be only for deposit accounts, not for borrower account. That is not the case. KYC is applicable to all the customers. Customer includes the borrower. So verify the instances of borrowers whether re-KYC norms are followed or not. And let me tell you the most common mistake. Let's presume that there is a housing loan and there is no saving account in the bank. So it's purely housing loan, term loan, which is existent for say 15 years. Now, even if you categorize that as a low risk category loan or low risk category customer, still after 8 years that re-KYC norms are applicable. Now verify that whether re-KYC is correctly applied or not, and whether risk categorization listing, whether it includes only depositors or it includes the borrowers also. Because otherwise it tantamounts to not following re-KYC norms or other KYC norms as far as borrowers are concerned. Then as far as exposure norms are concerned, there are two types of exposure norms. One is which are defined by RBI, that is single borrower and group borrower. And second is which are defined by the bank by internal circulars. Now as far as breaching of internal exposure norms are concerned, many a times it is ratifiable. The bank's credit policy might only include the clauses that how it can be ratified. If the ratification process is available, you may not really mention that or may not be considering that as a serious offense. But if the RBI exposure norms are flouted, it again becomes a regulatory norm. So ensure that RBI defined exposure norms are correctly followed by the bank. Second thing is that as far as the group borrower concept is concerned, the group borrower has to be defined by the bank. There is no RBI definition. So the bank has to define kind of an approved policy, I should say, and typically it should be forming part of your credit policy only. It should clearly define that what all will be included in the group. Now let me tell you where the challenges are. Again, let me ask you a question, but I will require some answers. Otherwise, I am only doing FAQ kind of exercise. I am only asking question and giving answers also. Let me ask you a question. Suppose husband, wife are there. Husband is a chartered accountant, wife is a doctor. Both are practicing. And loans are given to both. Husband has availed a loan for say setting up of a CA office. Wife has availed a loan maybe for purchasing say X-ray machine. Will you count it for group exposure purpose? They are not joint borrowers. Let's be very clear about that. Will you count it or you will exclude it? Logically, you should exclude. Now, what is the underlying reason? See, you need to read the RBI circulars logically. So, I will give another correlatable example. Now, let's talk about this example. See, wherever there is no income dependency on the repayment of loan, the bank can easily say that they are different borrowers. No group borrower concept will be there. But the moment there is a supportive kind of income support which is extended by other borrower or other customer, I should say, it's better to include that in group borrower concept. That is first thing. Now let me just extend this concept to commercial real estate exposure, CRE exposures, where typically There is a lot of grey area which is presumed to be there. Now why I am saying presumed to be there is, RBI circular is very clear. If you want to classify a loan as CRE, some basic conditions are there. First condition is that you need to see the income source for repayment. So the moment income source is largely dependent on other CRE, like say from rent discounting, or let's presume that monthly EMI is 1 lakh, 40,000 is paid out of normal income, 60,000 is paid out of rental income. It amounts to CRE, irrespective of what is the end use. So even if machinery is purchased, but the repayment is entirely dependent upon CRE income, it will be called as CRE exposure. So it's a very simple definition. Second example is that suppose someone is investing in CRE with a purpose to get rental income or some income out of that, it becomes a CRE exposure. Even if his regular income is capable to repay that normal the CRE loan. So both things are there. One is source of income related to CRE. Second one is investment in CRE, wherein the purpose is to earn income out of CRE. Their repayment is not related. Now why I am giving this example to you is, wherever you apply yardsticks of RBI regulatory norms, just apply your basic logic. And once you apply the basic logic, the RBI regulatory norms are easy to understand. There is a required freedom which is very much there within the RBI norms. The question is that you should be very clear about, in kind of a black and white, thing. You should not consider that RBI circulars are grey. They are practically black and white. Don't presume that there is any subjectivity. Apply your basic yardsticks. Another one which is very common mistake is that many a times pre-disbursement inspections are not done. Ideally a pre-visit, pre-disbursement visit, or maybe pre-appraisal visit also is something which should be encouraged. For the simple reason, the banker should be able to establish that there is existence of that borrower as well as his business. Both things should be achieved. And if this is not achieved, later on, if the loan turns into NPA, there is a possibility of two things. One is the account might be a fraudulent account. Secondly, there might be a staff accountability aspect. So as a banker, one need to be very careful about these pre-disbursement inspections. Then when you are doing disbursement, one should ensure that documentation is complete in every respect before disbursement. Why I am saying before disbursement is that there is a very common scenario. Typically, since March month is there, so there are targets which are required to be made. So in a hurry, actually, bankers might take signatures, on multiple documents, and then, at leisure period, maybe in the month of April, they will gradually fill it up. Now there are multiple issues in that. Firstly, if the borrower gets blank signed loan documents, he can simply challenge the entire loan process in the court of law. That my signatures were taken on a blank paper or unfilled form, and that can be easily challenged. Second thing is that imagine a scenario that suppose after availing the loan, the borrower has expired and somewhere the signature has got missed out. So ultimately it's a question of staff accountability. So don't even venture into that kind of a scenario. Better to ensure that the documentation gets completed in all respect before the loan is really disbursed. Now as far as documentation process is concerned, there is one more protocol which is followed. That wherever the blanks are filled up by pen, there are initials taken. All of you must have seen that. Can you tell me whether it is essential? Is it required under any law, or it's just a protocol? That wherever manual insertions are there, I should sign. Can anyone tell me? Suppose signatures are not there. Will you raise a query? There is no correction, it is fill in the blanks. So no correction is there. Wherever correction is there, I fully agree, because that has to be authenticated. But it is not a correction. Like, rate of interest, limit, these things are handwritten. Is it required legally? But it's difficult, even if signatures are there or not, that allegation can always exist. See, legally there is no requirement actually. No, there is no staff accountability. Because, whoever is writing actually, that person can be anyone. Means that's not an issue. So that signature is more of a protocol, not specified under any act. One more thing is there. See, there is a citizen chartered. How many of you are aware about that? Such document is there. Are you aware about citizen charter? Okay, are you aware about key fact statement? KFA, all of you are aware about. Citizen charter has certain additional things. Like you have to give copies of loan agreement. All documents which are executed ideally are required to be shared with the borrower. Now just introspect about a UCB scenario. How many UCBs are really sharing the document with the borrower? The answer is nil. Because negative is not possible, so answer is 0. So you need to, as an auditor, what you need to do is that you need to tell the management the reason why you are insisting on these things. The moment you start following a practice of giving copies to the borrower, everyone will naturally fill up all the details. So that's additional, kind of compliance which is easily possible. Otherwise, everyone will be at ease. Till the time auditor is not coming to the branch, no one will fill up the paper. And I will tell you the easiest litmus test. As an auditor, you just visit the branch in between the month and just ask them that which all loans have been disbursed in the last week, and ask for the files. If the files are made available to you, the bank is really efficient. If they are giving some reason or the other that the document is yet to be received and other things, then there is something which is missing in the bank. They are incurring a high level of risk of various matters. Then comes the monitoring part. So how the bank can monitor the loan? By way of certain exception reports. Some banks are adopting some AI tools or some applications also, like statement analyzers are there, wherein the account can be continuously monitored, and in case of any deviations which are abnormal, the signals can be triggered. Stock audit is another mechanism by way of which the monitoring is possible. Branch inspections are there. So typically not only post inspection, but in between also the branch manager should visit the unit just to ensure or just to see that whether the unit is working or not. So just to ensure that no early warning signal is visible. And secondly, as far as the renewal process is concerned, again the renewal process has to be undertaken only when all documents are submitted. And if any major document is not available, typically the bank might go for a short review and the regular renewal might get practically postponed. Checkpoints for the auditor actually, from auditor's perspective, verify the master data from various angles. One of it, I know we already spoke about priority sector lending. Accounts where the renewal is pending, you need to be very clear about one fact, that short reviews cannot replace the renewal process. So the master data purity has to be seen as to whether there is a bifurcation between the renewal and short review. Ad hoc and TOD limits which are sanctioned, you need to verify that how they are taken care in the CBS system. Some CBS system has two different menus. One is to increase the regular limit and another menu is for only ad hoc limits. So ad hoc limit per se will include all those accounts as overdrawn accounts. So it's only kind of a sanctioning power wherein the branch manager might be allowed to allow overdrawing to the extent of say 10%. It's not a sanction limit. So suppose the account is overdrawn by 10%, it is within the power of the branch manager, but the overdrawing will be captured by the system. So the subtle difference between TOD and sanction limit is that in sanction limit, there will be a regular process of issuing a sanction letter, taking an acceptance, maybe at least take a DP note against that. So that's a regular limit enhancement, maybe for a shorter duration. If it is a TOD, it's only a overdrawing which is permitted. Operations are allowed, but it is not a sanction limit. It has to get captured in overdrawn reports. So just see how the CBS is behaving, because practically you are auditing the CBS system, not really the borrower account. So you need to be aware about which are checks and balances which are inbuilt in the system. Unfortunately, in UCB sector, there are a couple of notorious softwares which are there, which can be customized the way you want. I will not name any software, but let me give you examples of that. I have seen certain softwares wherein backdated day can be open, and still today's end of the day, start of the day, all process was running on smoothly. Earlier few days were open. So if someone wants to do a backdated entry, that was very much possible, without any exceptional report, without any delegated authority. Now I have given you an extreme example. Let me give one more example, since you are talking about this point. I have seen a software wherein 31st March was not closed, and all the entries which were entered on 1st and 2nd April, they were entered as if they were of 31st March. So suppose there is a NEFT inward, which was received on 1st of April, that was getting posted as 31st March. So imagine a scenario, say from HDFC Bank, the outward remittance is of 1st of April, and in say ABC UCB, it is dated 31st March, as if something is going backwards in time machine. So these things do happen. As an auditor, you need to be very careful about that last day procedure and cut-off date procedures. Let me add one more point. I don't know how many of you have seen RBI circular related to type of business which can be carried out on 31st March. It's only agency business which is allowed. It means that bank can accept over-the-counter cash only for payment of taxes. So practically in UCBs, recoveries made in cash on 31st March becomes a regulatory violation. So be aware about that from bankers' perspective also and from auditors' perspective also. Refer the RBI circular. RBI circular nowhere is permitting cash recoveries on 31st March. It's only agency business which is permitted, and same scenario was there on 31st March 25 also. So be little aware about what can go wrong. Sorry? 31st नहीं ऑलरेडी डिक्लेयर हो गया है, वो सर्कुलर इशू हो गया है, इट्स ऑलरेडी इशूड. नहीं वर्किंग डे का सवाल ही नहीं. आरबीआई ने बोला है कि वो खाली एजेंसी बिजनेस करना है. आरबीआई सर्कुलर है, 1 या 2 पेजेस का सर्कुलर है और वो 25 के जैसे ही सर्कुलर है. नहीं वो 1 अप्रैल वाला जो रहता है ना कंसेप्ट, वो अभी गया है, वो ऐसे ही बैंक हॉलीडे रहता है. ऐसे ही मैं क्यों बोल रहा हूँ कि एक्चुअली ईओडी प्रोसेस तो हर मंथ एंड में ही होता है, ईयर एंड में कुछ अलग नहीं होता है, लेकिन ट्रेडिशनली 1 अप्रैल छुट्टी रहती है, वैसा चालू है. लेकिन वो सर्कुलर एक्चुअली सी वी कैनॉट चैलेंज द रेगुलेटर, सो लेट्स लीव दैट असाइड. द सर्कुलर टॉक्स अबाउट ओनली एजेंसी बिजनेस. व्हाई आई डोंट हैव आंसर. So if I look at it as a banker, it's a troublesome thing, because for bank it becomes 30th as the last date for cash recoveries. For NEFT, RTGS, everything is open, so that's not an issue. Till midnight of 31st March, all transactions are possible. But for cash or check deposit, it's only for agency business. You can refer to the RBI circular. In fact, I will suggest you to compare 25 also and 26 also. So we can understand what might have gone wrong on 31st March 25, compare it with the current period. So my suggestion is that wherever you are doing audit, you should not wait for the bank to make a mistake. See, we don't get rewarded because we have found out 10 mistakes. There is nothing of that sort. A good auditor is that he tells the risk beforehand to the bank. And in spite of that, if the bank is doing a mistake, then it's absolutely fine to report it, because you have already alerted them. So wherever you are doing audit, just show the circular, ask them that what kind of precautions they are going to take for 31st March cut-off date procedure, so that as an auditor your life will be simpler. That you don't have to litigate in April about certain recoveries, because then the litigation will be go in a different tangent. Bank will say that we have recovered, so the account is PA. You will say that recovery was not permitted. So better to avoid this kind of litigative part. Always ensure that as an auditor you are sure that there is no evergreening of account which is happening. Now let me give you a simple example of evergreening. Suppose I am a proprietor of a trading entity, and my account is maybe term loan is there, more than 3 installments are there. So my account should ideally turn into a NP account. It's more than 90 days concept. There might be a possibility that I might avail a loan against my individual property, not connected to business. I will avail a OD facility, regularize this particular term loan. It amounts to evergreening, even though the source of security is different. Because the end use is to regularize another loan account, it is called as evergreening. Let me give you a little odd example. I am having a FD with the bank. I will encash the FD, pay that term loan overdue portion. Do you think it is a evergreening case? See, this particular case is not evergreening case, but it indicates that there is an inherent weakness in the account. Source of income is not there. So as an auditor, you need to be aware about bifurcating between evergreening and not having regular source of income. If it is a one-off case, it's perfectly fine. Throughout the year, everything was, going on well, sufficiency of credits, sufficiency to prove that the business is regular and running, then all these one-off cases are fine to ignore. But if you see that for all 12 months, the account was always running, not in order, maybe 2 installments, 3 installments are always overdrawn, then you need to be little alert about that. Another interesting part which is there in few of the banks, that many times the field officer writes an adverse remark in appraisal note, and the higher ups ignore that remark and they sanction the loan. Now theoretically, the powers are always there. Till credit committee, all the powers are there. The question is what kind of adverse remarks are there and how they are addressed by that particular higher authority. If there is no mention in subsequent sanctioning by higher authority, if they are not addressing to those concerns, and if the concerns are serious, you need to point it out in your LFAR by specifying that there are lacunas in credit appraisal process, that there is no clarity which is given, wherever there are adverse remarks are there. Then as far as classification of advance is concerned, one more thing is that when you are talking about priority, non-priority, you should be very clear about the sectorial classifications also. Typically, direct agricultural loans, indirect agricultural loans has a different kind of repercussions in terms of interest calculation also and in terms of NPA classification also. So sector-wise classification, priority, non-priority wise classification is something which you need to be aware about. As far as charge creation is concerned, always ensure to verify that whether the proper charge is created in ROC, whether on periodic basis the ROC search is taken or not. Same thing applies to surcharge charges also. Now let me ask you a simple question. Suppose a borrower wants to do a fraud by taking multiple finance, say in purchase of residential flat. Do you think it is possible? And if yes, how it is possible? Okay, let me give you an example and you tell me whether such frauds can be identified. Let's presume that I want to do a fraud. So I will enter into a purchase agreement. So first purchase agreement is dated 1st of March 2026. I have purchased a flat, a genuine agreement. Of course, buyer and seller both should be together. Otherwise you cannot do that. So that's the first agreement which is registered. I avail a loan from one bank. On 5th of March, I again register a similar agreement. Do you think it is traceable? Now that traceability is only possible when you take a title search report in your registration data. Otherwise, it's practically not possible. Now, what is the way out for the fraudster? What he will do? He will have that registration done for multiple accounts and apply at the same time. So search report is taken at the point wherein there is only one agreement, but on the same date I am having multiple agreements. Now, what you need to ensure as an auditor? You need to be very clear about one fact, that you are not the expert from legal side. So ensure that whether the title clearance report was obtained, whether it is clean and it is not subject to certain things. That is first thing. Secondly, many times the valuation report also will have a mention about that. And always make it a point to have your checklist include these details. Because many times what we do, or where the error really happens is, we have checked everything, but there is no substantiating proof that you have checked all these things. So simple one-pager checklist for every loan will help a lot. And how to include certain details? You have a kind of a line item, the title clearance report, yes, no, add that date column also, in that, so that it will substantiate that you have taken proper precautions. Now, if someone is doing some kind of a different fraudulent techniques, as an auditor, you are never held responsible, provided you are having everything documented, that what exactly you have verified. And many times it helps. The moment you have couple of columns, like a particular document, whether it is available, yes and no, plus date of that. Once you have all the dates on a single page, you can see that whether the title clearance date, loan disbursement date, stamp paper date, registration date, everything is in sync or not. Because there has to be order. I cannot obtain a title clearance report after the loan is disbursed. It's of no use. All these are preconditions. So as an auditor, you have to apply this yardstick in a logical way. That what is the chronology of all these events in the same order that chronology should happen. Like valuation report, title clearance report. Maybe in some banks they have documents, legal waiting also, which is done beyond a particular point. All these things are pre-disbursement. Once the loan is disbursed, it's like firing a bullet. You cannot bring it back. Then the bankers are at mercy of the borrower. You have to run after the borrower as a bank and obtain whatever documents are missing. Let's come to certain documentation concept. This is just an illustrative list of typically what all kind of documents are there in the bank. The list is illustrative, so in some banks there might be a different nomenclature which might be given. Why I have disclosed or listed down this list is, when you prepare a checklist for verification of advances, ensure that for each product you know that which are the standard documents which the bank should take. So prepare a checklist, a single pager checklist based on type of product, documents required as per the documentation policy of the bank, and along with that apply your normal logical yardstick, that which documents are really essential for a particular loan depending upon the nature of loan. Now, like for example, deed of guarantee, it may not be required for every each and every type of loan. DP note, typically it will be required for most of the loans. Continuity security bond, it will be required only for CCOD, not for others. So depending upon the nature of loan, the banking practices which are followed in credit portfolio, you need to understand that. Acknowledgement of date is something which is very vital. Now let me tell you from both points, bankers as well as from the auditor's perspective. For bankers, many times it becomes a kind of a handy tool in case of any litigation matter which happens related to documentation. Sometimes there are lacunas in documentation which are challenged by the borrower in the court of law by saying that I was not aware about loan, and a number of reasons are given. AOD becomes a kind of a handy document because in AOD he acknowledges that the amount is due to the bank. He was aware about the loan which was availed. So having a AOD duly signed by the guarantors as well as the borrower is something which is legally provable thing for any bank. Another thing, let's look at from the auditor's point of view. As far as standards on auditing goes, you have to obtain balance confirmation from third parties independently. AOD acts as a kind of a handy tool that you have obtained third party assurance about the balance outstanding. So maybe you can pick up couple of instances, directly send them the letter, taking bank into confidence, obtain AODs directly with you. That will give you a compliance about the standard on auditing, because typically what we presume is, we typically take confirmation from the bank or maybe at the most maybe investment portfolio, and we presume that we have complied with standard. Now if you look at the bank, deposits and advances are major chunk, and as an auditor we fail to obtain confirmation from the borrowers and the depositors on that portfolio. So maybe pick up, maybe it's a 10 depositors, maybe 10 advance holders, ask them for a direct acknowledgement of date, directly send it across to you. You will be compliant from standards on auditing point of view, and it doesn't really take much of a time. You have to just pick up randomly 10 pieces. Few typical wordings: mortgage, pledge, hypothecation, assignment, set off, lien. These are typically used jargons. Those of you who might be doing articleship, the best way to understand these things is you need to have a chart actually, just to understand what every nomenclature means. You don't have to really mug up, or you don't have to really remember these things. All these nomenclatures will be known to you the moment you progress in practice or in auditing profession. So in mortgage actually there are two types: English mortgage, equitable mortgage. English mortgage in India it is typically not done because the title has to be transferred. Equitable mortgage is, and registered mortgage are most common things. And just as an example I have given, typically it will be done for immovable properties. So this chart is just an example about where the financial jargons are used. So when you talk about pledge, typically it can be FD, gold, NSE stock. Hypothecation can be stock, book dates, vehicle, plant and machinery. Assignment can be typically for life insurance policies that the beneficiary rights are assigned. Set off, actually typically the words are used, right of lien and set off. It's a general lien and set off, which typically the bankers enjoy. Now what is the purpose of that? The purpose is for the purpose of recovery, and secondly for the purpose of calculation of capital adequacy. So let me give you an example how it works. Let's take an example that I am having an exposure of housing loan and personal loan, in a particular bank. Let's say housing loan is 50 lakhs, personal loan is say 2 lakhs. Overall 50 plus 2, 52 lakhs is the exposure. I am having a saving account and FD balance to the tune of 5 lakhs. Now there is no lien marking on my FD. They are free of lien. Now since bankers are having general lien and set off, practically the bank can recover these 5 lakhs from me if I default on any of the conditions of the loan. So it's called a general lien and set off. You don't have to have any lien marking which is made on that. So on a particular date, when you calculate the capital adequacy, when you are calculating the exposure, it will be always 50 plus 2 minus 5. It's not 52 lakhs of exposure which the bank is taking on me. It's only 47 lakhs. Now the only question is how the bank is controlling that exposure, because the risk weight, if you recollect, the risk weight for housing loan and personal loan is different. Now that 5 lakh has to be appropriated, some portion towards housing loan, some portion towards personal loan, and then the calculation should be done. If the bank where you are doing audit, if they are not using this general lien and set of benefit, just tell them how to use it, how to calculate that, and their capital adequacy will improve drastically. The moment the bank is having a good UCIC concept, unique customer identification concept, the capital adequacy has to be on a higher side. So just give them a helping hand wherever you are doing the audit, because sometimes the UCBs are missing on this point. And secondly, there is a subtle difference between commercial banks and UCBs for capital adequacy calculation. When you are talking about exposure, in commercial bank it is drawable amount. So suppose I am having a CC of say 10 lakhs, my balance outstanding is 6 lakhs. For commercial bank, my calculation will be based on 10 lakhs because it is a committed exposure. As far as UCBs are concerned, it is based on balance outstanding. So as an auditor, when you are doing public sector bank in the first week, you have to think of 10 lakhs, then you have to switch and go back to the exposure norms for UCBs and apply that yardstick. So just keep these things in mind, because these are common mistakes which can happen from auditor's perspective also. You are in a different mindset for first 10 days, 10 or 12 days, whatever days are available to you. Again, this type of security and the type of pledge, hypothecation, assignment, it's only a chart actually, just to give you an instant reference kind of a thing. General lien and negative lien, typically negative lien is not that common actually. Sometimes the bank undertakes a negative lien so that those securities cannot be given as a security to any other financer. So there is no lien marking which is done. It's a kind of a prohibition, kind of a no compete clause. Like you should not go to others by availing security cover using these underlying securities. But directly bank cannot recover against those securities. So negative lien, it's uncommon, but some Indian banks are using this kind of a technique. These are again nomenclatures pari passu inter se, first charge, second charge. As far as first and second charge is concerned, what you need to keep in mind is whenever a bank is having a second charge, whatever balance amount remains after that first charge creating entity is utilizing, only to that extent security valuation will be available. So suppose 10 crores is the security value, my bank is having a second charge and the first charge is by some other bank and their outstanding balance is say 7.5 crores. So I will get only 2.5 crores. Now how to calculate 2.5 crores? I need to have details of balance outstanding. So I need to obtain the information from that other bank, then only I can avail that security value for my secured unsecured portion. If the data is not available, I cannot avail, because second charge is always subject to that first bank. So there is a kind of a low probability to have that security balance really available to your bank. As far as monitoring of advances are concerned, a couple of examples. Ideally, the bank should be using CAD tools. I am specifically avoiding the word AI tools for the simple reason you need to understand that DPDP Act is almost applicable, I should say. So whenever you are using AI tools, unless and until that tool is resident in your bank, then only you should go for that. Wherever any data is required to be uploaded, on the internet, irrespective of whatever is that AI providing, agencies assuring you, it's better not to use that. Typically, all the CAT tools are resident in the server. So you can easily make use of that. There is no data which flows outside the bank. But CAT tools is the need of hour. The banks can easily use that not only for monitoring of advances, but for various exceptional reports and various monitoring purpose reports, or maybe even MIS also. Just to give an example, a little offbeat example not related to advances. The biggest challenge before UCBs nowadays is that they are not having customer base which is of younger generation. So if you ask a kind of a age-wise profiling of the customer, most of the customers of UCBs, they are almost on the verge of crossing 50s, or maybe 45 is the age, it's the threshold age. Now the biggest challenge why I'm saying is that there is a challenge of survival before the UCBs. Now how to identify that, to what extent the bank is carrying the risk? You can use CAT tools to understand that what is the age profiling of my depositors, what is the age profiling of my borrowers. If as a bank, if I happen to know that say 80% of my borrowers are in the range of 50 to 55 age, it's a red signal for me, because in next 5 to 6 years, the second generation will come up. I'm going to lose all my customers. That's a practical scenario. So usage of CAT tools is not only for monitoring of advances or to do a credit appraisal. The purposes and usage can go very well beyond that, and it's really required for the UCBs to introspect as to how many comparatively lower age customers are really attracted to UCBs. I don't know whether directors are sitting over here or not, but let me add one point. Especially the directors or executives of the bank has to ask one question to themselves as to within their family, how many family members are using their bank as the first UPI bank. There are multiple banks you can add in UPI, and that can give you answers. If you happen to have a very low ratio, that you yourself are not using UPI of your bank, then the chances of survival are really low. I know that it's a kind of an off-track statement which I'm making, but since all of us are associated with UCBs, I just thought to kind of raise a red flag, about what is lying ahead with the UCBs, unless and until they are really keen to go along with the technology, go along with the younger generation, because otherwise practically they will lose the ground. Another thing is that early warning signal is required to be incorporated in the system. So verify that what kind of early warning signal mechanism is there in the bank, and how that is made effective by the bank, and what is the tolerance level which the bank has defined as far as early warning signals are concerned. So this was all about the advances. If any queries are there, maybe we can take up queries, or I can first finish off the IRAC norms and then we can go back to the query. Any queries about advances? No? Okay. So should I start with IRAC norms? I will just try to cover most of these things by giving some practical examples. I will first give you the background, and maybe then I will give you a couple of examples. Few examples I have already included in the slide. So I will show the actual typical ledger account of the particular advance account, and we can deliberate on that. RBI circular I already listed down earlier also. Only thing is that as far as IRAC norms is concerned, now you have to refer two circulars. One is the master direction of IRAC. Second one is the resolution of stress asset. And that circular includes natural calamity related provisions also. So earlier everything was combined in one circular. Now you have to go to the two circulars. Things are bifurcated now. Now as far as automation of IRAC norms is concerned, it is applicable for tier 3, tier 4 banks, and also to those banks wherein the asset size is above 1000 crores. For banks which are below 1000 crores, system based NPA is not applicable, but there is a condition. RBI talks about ongoing NPAs being implemented in that. I have yet to understand the difference between ongoing NPA and system based NPA. So practically both are same. At the most you can say that maybe provisioning is done on a monthly basis. But as far as identification of NPA is concerned, once you say it is ongoing, so at the end of the day, every day, you have to identify the NPS. Maybe income reversal, provisioning might be deferred to certain extent, but identification is must. Secondly, coverage includes everything. So income recognition, asset classification, provisioning, and all types of exposures will be included. So adverse balance in deposit is also included, investment is also included, CCOD is also included, non-fund based limit is also included. As far as NPA norms for non-fund based limits are concerned, there is a clarification which is given by expert opinion by CA Institute. All of you must be aware that there is a opinion mechanism wherein one can refer to the CA Institute and there is expert opinion which is given. So let me spell out what is expert opinion about non-fund based exposure. So let's presume that I am having a CCOD and there is a LCBG which is outstanding. What the expert opinion talks about is, if there is a certainty of devolvement of LCBG and there is no supportive funding which is available in that particular account, then you have to make the provision for that non-fund based exposure also, again on a case to case basis. So suppose there is a company which is running well, but technically it has turned into NPA. You don't have to make a provision because it has a capability of income generation. But if a company is defunct and there is likelihood that the BG will get invoked, it's better to make a provision for that BG also, even if it is not a funded exposure. Because later on, anyway the BG is going to be invoked based on the circumstances if the company is defunct. So in that case, the provision will be warranted. Expectations are that it has to be a straight through process, part of EOD process, and in case of any manual intervention, the bank should have a board approved policy. So these are the preconditions or other expectations which RBI spelled out. Now let's come to the regular IRAC norms. Now what is the objective of IRAC norms? It has been defined in initial para itself. See, firstly, when you talk about the classification criteria, RBI is expecting that banks should have an objective criteria. So there is no scope for subjectivity which is provided in the IRAC norms. Except one instance, when you are talking about inherent weakness, there is always a subjectivity. But otherwise, it's an objective criteria. Secondly, the bank is required to adopt that on a uniform and consistent basis. So there is nothing like a large borrower, small borrower, wealthy borrower, poor borrower, someone which is having say partial collateral cover, someone not having a primary security, nothing of that sort. The norms are applicable uniformly. When we talk about the provisioning part, it depends upon firstly whether it is NPA or PA. If it is NPA, how long that has remained into NPA category. Based on that, substandard DA1, DA2, DA3 will be decided. And then based on security, availability and security value, the secured, unsecured portion will be carved out. So for doubtful asset category, for unsecured portion, it will be 100% provided. For secured portion, for DA1 it is 20, DA2 it is 30%, DA3 it is anyway 100% provision which will be required. Though as far as the responsibility is concerned, IRAC circular specifies that responsibility of correct classification, correct provisioning part, the auditors as well as management both are equally responsible. Otherwise, in all other circulars, you will see that the circulars are addressed to the bankers, not to the auditors. So theoretically, the circulars are not applicable to the auditors; they are only applicable to the bankers. Have you ever seen a circular which is addressed to the auditors of, say, UCBs? There is no circular. All are addressed to the banks. Because RBI is a regulator for banks and not to the auditors. Institute is very much there as a regulator. And that is more than sufficient kind of a regulatory part. Except this circular, in all other cases you can presume that. But here RBI has categorically stated that you are also responsible for that correct classification and income recognition part. Now what is the definition of PA and NPA? Easiest thing is that you can just remember two things. One is normal RBI norms, typically 90 days norms. And second thing is that wherever there is a higher risk than normal banking risk is involved, that account can be marked as NPA. Easiest example is a project loan. So in case of a project loan, suppose DCCO is not achieved, the date of commencement of commercial operation is not achieved by the borrower. Even if the account is regular in repayment, the account will turn into NPA. Now what is the reason for that? Because the income generation activity is yet to start at a committed date. So if the commitment is not fulfilled to initiate the commercial production, the account will turn into NPA. The moment production starts off, the account will again turn back to PA, provided there are no overdues which are there in that particular account. Let me give you another example. Suppose the stock statement is not submitted by the borrower. Now it indirectly means that the DP won't be there. The account might turn into NP even though it is within the limit. So these are few examples wherein we can say that there is a higher risk than normal banking risk which is involved. And all such accounts will turn from PA into NPA category. Now let me first talk about few important terms. One is overdue status. Now what is meant by overdue is that wherever there is a commitment between the borrower and the bank to repay a particular loan which he has availed, and if he doesn't fulfill that commitment, then to that extent that amount will become overdue. So just to give a simple example, suppose I have availed a housing loan with say 10,000 rupees of EMI due on every 10th of every month. If I don't pay by 10th, at the end of the day of 10th, my account will become overdue because the commitment was to pay before EOD. So EOD is the first day. So that's how your overdue days will be counted. If I pay earlier to 10th, naturally my commitment is fulfilled. Suppose if I pay on 9th, so I am fulfilling the commitment. So any prepayments will amount to fulfillment of your commitments. Another thing is that reversibility of income will be applicable only on account turning into NPA. Now under reversibility of income, what is required to be reversed or derecognized is unrealized interest. So unrealized interest concept is applicable only for NPAs, and that is not a condition for NPA. It's a fallout of NPA. So always remember one thing, overdue is different, unrealized is different. So overdue might make your account in a kind of a NPA account. Unrealized income, unrealized interest will not turn an account into NPA. It is a fallout of account becoming NPA, not prior to that. And key fact statement is something which is very vital document as far as the banks are concerned. So ensure that wherever you are doing the audit, whether the bank is sharing key fact statement with the borrower or not. Key fact statement contains typically basic things like what is the repayment schedule, what are the terms of sanction, when penal charges will be applicable to that borrower, or any other charges, like inspection charges, insurance charges, whatever it is, commitment charges, everything has to be part of key fact statement. One more important thing, wherever you are doing the audit, always visit the website of the bank. All the charges are required to be available on the website, and that should be accessible. In the sense, those should not be required to be found out. There is no treasure hunt about how to find the charges. It has to be prominently displayed. The menu should be prominently there. And let me tell you where the regulator can go, to what extent, about, since we are talking about the website. The website is also required to have the customer complaint, tab. There is one bank which I know, which was having customer complaint tab, but which was under one of the pull down menu. It was not in the first one. The bank was penalized by RBI. So you need to be aware about what is expected on the website of the bank. And as an auditor, you need to test it. So suppose you have a new, bank charges, say circular, which is issued by the bank, say effective from 1st January 2026. Site is displaying some old bank charges structure. Then the bank cannot apply the new structure to the borrowers or customers per se. So anything which is related to customer service, whether it is borrower or depositor, that has to be made part of your website. Otherwise, it's a violation. And why again and again I am repeating the word violation is that once we say it is violation, we look at it very seriously. If we say that it's a mistake, actually, we always have a lenient kind of approach. Now, as far as auditors are concerned, let me give you a very simple tip. How to report in LFR. Maybe, bankers will not like to even spare me actually when I say that. See, wherever you are raising a query, the best way to raise a query is that you should quote the RBI circular, then say that what is the factual thing, and then conclude it. The moment you start raising queries in this fashion, divided into three parts, quoting RBI circular or BR Act or any act provision, what is the factual thing and how it is violating violating that particular expectation. That is a better way, that is a transparent way to raise the query. For the bank actually, they should equally respond back to any query by citing the examples or citing the sections or paras which are there in the Act or they are there in the master direction or any circular of RBI. That's the way to resolve the query and raise the query. That makes, the tussle between the bankers and the auditor much at a lower level. Okay, going back to the presentation. So let's start with term loan. So as far as term loan is concerned, if interest or installment, that is principal portion or EMI, if it is overdue for a period of more than 90 days, the account will turn into NPA. So 91st day is the day when the account will turn into NPA. Now here the word overdue is important. Now how to calculate overdue amount? You are having key fact statement which gives you a repayment schedule. So it can give you an ideal DP on a particular date. You have to compare the ledger balance with ideal DP. Till the time your ledger balance is less than ideal DP, your account is not having a overdue status, account will be always standard. So suppose someone has paid lump sum in advance and later on interest is simply getting debited in that particular account. The interest is unrealized, but overdue concept will be purely based on ideal DP and ledger outstanding balance. So wherever your ledger balance is more than ideal DP, overdue portion will be there. Then you have to see that whether that overdue was more than 90 days. Now how to calculate that? You need to understand the demand satisfaction concept. It is always on FIFO basis. So suppose 10th is the due date for 10,000 rupees. Every 10th demand of 10,000 is there and that will get satisfied like a water flow. It will be FIFO basis. So when you are calculating the reverse way, you have to go like LIFO, from top to bottom, and then see that which are the demands which are outstanding. There might be a demand other than EMI also, like some insurance charges are debited. So those are instantly payable. Any visit charges are there, they are instantly payable. Notice charges, they are instantly payable. So that's how using a LIFO basis method also you can calculate for how many days the overdue component was available. Now as far as reversibility is concerned, whenever any account turns into NPA, not only income but even the charges are required to be reversed. So any unrealized component which is debited in that particular account will get reversed the moment the account turns into NPA. Now few exceptions to this rule are there. Suppose there is a moratorium period in a particular account. First 6 months there is a moratorium for interest payment. So interest will get debited in the account but it is accrued but not due. After 6 months it will become due and after that on 91st day the account will turn into NPA. So you have to verify what is the sanction letter says, how that is inbuilt in the CBS system and whether the overdue statement is correctly extracted or not. Second example is that there is a possibility that some kind of staff loans might have been given, typically staff housing loans, wherein initially the principal portion is recovered and later on the interest is recovered. You have to go by the repayment schedule which is defined as a part of contractual term. So whether it is principal or interest, it doesn't matter. What matters is what is the commitment of repayment and based on that you need to calculate. Second important thing is that many times the bank will take lien and set off against the retirement benefit. Now that is only a mechanism to ensure additional security. It doesn't give any exemption to staff loans. Staff loan is like any other commercial loan, as far as IRAC norms are concerned. Now one more important thing which you need to remember about staff loans. As far as commercial banks are concerned, staff loans are not considered as a part of advances. As far as UCBs are concerned, they are considered as a part of advances. So when you do classification of advances, even staff loans are included, unlike commercial banks. Now there is a challenging part. See, sometimes there might be a staff loan which is exceeding either the exposure limit for a particular type of loan, let's say housing loan, or maybe the tenure of that particular loan. So suppose there is a bank which is giving a housing loan to staff for 25 years. Can you say that it's a regulatory violation? Because 25 years of housing loan is not permitted, or say 30 years. Now how to handle this scenario? Let me talk from banker's point of view. What the banker can define is, the banker has to say that it is part of staff settlement, that is wage settlement. So it's a contractual obligation. It is part of my compensation package. That it's not only salary which I am going to pay to that particular employee, I am indirectly paying him this additional benefit also. Need not be a financial perquisite, but it's a kind of a perquisite in kind. And that's the only defense which the bank can have in front of regulator. It's a very common query which gets raised from the regulator side. So prepare yourself if you are having some kind of scheme. which is exceeding the commercial loan related validation of that number of years of period. This is just an example actually. Now in this example, so 10,30,000 is the balance and 10,000 is the EMI. So 3 EMIs are paid lump sum on 3rd of March and later on there is no EMI which is paid. So the account will turn into NPA on 30th of September, after completion of subsequent 3 months. When the account is marked as NPA, all these 5,000 rupees which are there, which are 7 instances of interest portions, all those interest portion will become unrealized. So the reversibility will be 7 into 5, that is 35,000. Now this 30,000 which is paid, which has been already credited on 3rd of March, that cannot be said to be taking realization concept for March, April and May installments. Because the amount is already adjusted. So you cannot realize the interest. See, the concept of realization is that the interest should be debited in the account and subsequently there has to be a credit. Earlier credits can never be used for subsequent interest debits. Now in this case actually, even if 31st March, 30th April, 31st May, interest is just getting debited in the account, that account is not overdue because 3 installments are already paid. Commitment is already fulfilled. After that, from the month of say June, July, August, September, the account will turn into NPA because 10,000 EMI is no more paid. So the moment it crosses 90 days barrier, 91st day, the account will turn into NPA. Is it clear? Realization concept. Any doubts? Yeah. इंटरेस्ट पे नहीं कर रहे, नहीं, वो जो इंटरेस्ट जो है इसमें कैसे प्रिजम्पशन ऐसा है कि 10,000 का मेरा EMI है. हाँ, सो लेट्स एक प्रिज्यूम करते हैं कि मंथ एंड मेरा EMI ड्यू डेट है हाइपोथेटिकली. तो मैंने बैंक को कमिटमेंट क्या दिया कि हर मंथ एंड में मैं 10,000 लाके दे दूंगा आपको. तो 31st मार्च, 30th अप्रैल, 31st मई, पहले 3 महीने का देखते हैं. तो ये 3 महीने का मेरा कमिटमेंट है. मैंने आपको यानी मैंने बैंक को मार्च, अप्रैल और मई ये तीनों के कमिटमेंट पहले ही दे दिए. तो मैं डिफॉल्टर हो जाऊंगा बैंक का या नहीं हो जाऊंगा? कमिटमेंट इतना ही है, 10,000 देना है महीने का. इंटरेस्ट का बाद में सोचते. मुझे जो बैंक ने की फैक्ट स्टेटमेंट दिया उसमें लिख के दिया है कि हर मंथ एंड में आपको 10,000 रुपया देना है. मैंने पहले ही दे दिया, तो मैंने मेरा फुलफिल कर दिया. हाँ हाँ, नहीं, मुझे EMI जब भी बैंक देती है तभी बैंक मुझे क्या कहती है कि हर महीने में आप EMI जमा करो, राइट? तो मेरा ऑब्लिगेशन क्या है बैंक के लिए? हर महीने में मैंने 10,000 देने चाहिए. मेरी कमिटमेंट इतनी है. इंटरेस्ट कैलकुलेशन जो बैंक और RBI के हिसाब से हो जाएगा, जो भी हो जाएगा वो. मेरा कमिटमेंट EMI पेमेंट का है. मैंने 3 महीने का EMI दे दिया, तो वो 3 महीने में मैं वापस तो EMI नहीं दे दूंगा बैंक को. मेरा रिपेमेंट शेड्यूल चेंज नहीं हुआ है, रेट ऑफ इंटरेस्ट चेंज नहीं हुआ है, टेन्योर भी चेंज नहीं हुआ है. अभी मेरा अकाउंट में क्या दिख रहा है कि मेरा इंटरेस्ट अनसर्विस्ड है. अभी वापस मैं पीछे लेके जाता हूं. टर्म लोन का जो कंडीशन है उसमें क्या लिखा है? मेरा इंटरेस्ट या इंस्टॉलमेंट ओवरड्यू रहेगा तो मेरा अकाउंट NPA हो सकता है, यानी ओवरड्यू फॉर मोर देन 90 डेज. अभी ये एग्जांपल आप देखेंगे तो मेरा ओवरड्यू तो अमाउंट हुआ ही नहीं है, अनरियलाइज्ड है मेरा. तो अगर मेरा ओवरड्यू नहीं है अमाउंट तो मेरा वो कैटेगरी में ही नहीं जाएगा. रियलाइजेशन का कंसेप्ट जो है वो फॉल आउट है NPA का. तो पहले NPA होना चाहिए, उसके बाद रियलाइज का कंसेप्ट है. और एक दूसरा लॉजिकली बोलता हूं, जैसे हम लोग 2 जन हैं, आपने मुझे कुछ लोन दिया है, मैंने आपको कमिटमेंट दी है कि मैं 12 महीने में आपको वापस कर दूंगा. और ऐसे पकड़ के चलो मैंने 11 महीने का साथ में आपको दे दिया. 12 लाख रुपए मैंने लिया, 11 लाख मैंने पहले ही दिन पे वापस किया. तो 3 महीने के बाद आप मुझे डिफॉल्टर बोल सकोगे? ये छोड़ दो, यानी आरबीआई का छोड़ दो, नॉर्मल लॉजिक यानी कॉन्ट्रेक्चुअल एग्रीमेंट। मैंने कमिटमेंट क्या दिया था कि 12 लाख आपको मैं चुका दूंगा 12 महीने में इक्वल इंस्टॉलमेंट में, इंटरेस्ट भी छोड़ देते टाइम भी, मैं 1-1 लाख दे रहा हूँ आपको। मैंने तो 11 महीने का आपको कमिटमेंट है वो पहले ही दे दिया, तो मैं तो आपका डिफॉल्टर तो नहीं हो सकता, क्योंकि आप अगर मुझसे पैसा मांगने के लिए आएंगे मैं बोलूँगा आपको तो पहले ही दे दिया मैंने। सेम लॉजिक विल अप्लाई हियर। और एक एग्जांपल देखते हैं। अभी इसमें क्या हुआ है, अगेन ऑन 1st of March 10 lakhs आर डिस्बर्स्ड, 10,000 इंस्टॉलमेंट है। 31 मार्च में 5,000 लगा, 30 अप्रैल को 5,000 लगा, एक ही इंस्टॉलमेंट मैंने पे किया, तो माई अकाउंट इज टर्निंग इनटू एनपीए ऑन 29 जुलाई, एग्जैक्ट जो 91st डे है वो। अभी इसमें क्या हो जाएगा कि ये जो 10,000 है वो जो 5,000 दो जो है, पहले तो अकाउंट एनपीए करना है, तो अकाउंट मैंने मार्क किया 29 जुलाई को। अकाउंट मार्क करने के बाद मुझे स्टेटमेंट ऑफ अकाउंट में देखना है कि मेरा अनरियलाइज इंटरेस्ट कितना है, तो ये दो जो 5,000 है उसके बाद मेरा 10,000 आया है, तो मेरे वो दो तो सर्विस हो गए, आगे के दो बचे, तो मेरा जो 31 मई का और 30 जून का जो इंटरेस्ट है वो मेरा अनरियलाइज्ड है, उतना मुझे रिवर्स करना है या तो प्रोवाइड करना है। तो पहली कंडीशन मेरा ओवरड्यू होना चाहिए मोर देन 90, वो होने के बाद मुझे चेक करना है कि अनरियलाइज कितना है, और अनरियलाइज में दोनों आएगा, चार्जेस भी आएंगे और इंटरेस्ट भी आएगा, दोनों आ जाएंगे। Then as far as bill discounting facility is concerned, if bill discounting is outstanding for more than 90 days, the account will turn into NPA. Agriculture advances, 90 days norms are replaced by crop season norms. So for a short duration crop, 2 crop seasons, the account should be overdue. For a long duration crop, it has to be overdue for more than 1 crop season. So long duration, short duration crop season is, short duration means up to 12 months, and more than 12 months becomes long duration crop. Now what the bank should take a precaution. Typically in UCBs, agricultural loans are not that common. But suppose you happen to give any agricultural loan, you need to be very clear about capturing the master data about what is the crop season, in the sense which crop is cultivated by that particular farmer. तभी तो आप ये लगा सकेंगे norms. Second thing is that you should apply the logic of agricultural loan. जैसे कोई farmer है and suppose he has purchased Mercedes. He cannot say that Mercedes is purchased for transportation of crop. That is something stretching it beyond a basic logic. So you have to apply the norms logically. Even the gold loans, if the end use is related to agriculture purpose, you can say that it is AGL, agriculture gold loan. But suppose some loan is availed by a farmer, maybe for wedding in the family, that is not an agricultural loan. So source of income is not important, end use is important. Then let's come to CCOD facilities. If any facility is classified as out of order, then the account will turn into NPA. There are 3 conditions for that. First condition is that if the account is continuously overdrawn for a period of 90 days, the account has to be marked as NPA on 98th day. So here condition is not 91st, it is 98th day. Secondly, if there are no credits in the account for last 90 days, then the account will turn into NPA, irrespective of whether you are within limit or not. And third thing is that if the interest summation in particular block of 90 days, if you compare that with credit summation, and if the credit summation is less than interest debits in that 90 days norms or 90 days period, the account will turn into NPA. Now if any of the conditions are fulfilled, you have to mark this account as NPA. Specifically, last 2 conditions will be applicable even if the account is not overdrawn. Account might be within the limit. So typically which cases are there? Typically OD against properties are the cases where an account turns into NPA in this last 2. Because the accounts are within the limit, amount might be hardly utilized. लिमिट रहेगा 25 lakhs का, यूटिलाइज है 2 लाख, लेकिन अकाउंट में ट्रांजैक्शन नहीं है, द अकाउंट विल बी मार्क्ड एज एनपीए. Few things actually which you need to verify. First thing is that you need to ensure that your CBS is robust enough to capture the effective date of drawing power wherever the stock statements may not be submitted on first, because practically there are very few borrowers who can give you stock statement on first. Now what is the effective date of stock statement? Can you tell me, is it date of submission of stock statement or is it first of the month, of subsequent month? जैसे फॉर एग्जांपल जनवरी स्टॉक स्टेटमेंट है, वो बोरोर ने सबमिट किया 20th फरवरी को, एंड डीपी इज चेंजिंग, यू नो, लेट्स प्रिज्यूम दैट अर्लियर डीपी वाज 10 लाख, नाउ इट इज 8 lakhs. So what is the effective date of 8 lakh? Is it 20th February or is it 1st of February? बोरोर तो कभी 1 तारीख को देता नहीं है स्टेटमेंट, आगे कई तारीख रहता है, 5 तारीख, 20 तारीख, 25 तारीख. What is the effective date? I am not asking through RBI circular. There is nothing mentioned in the RBI circular. What is the banking practice? मुझे ऐसे लगने लगा कहाँ पे स्टॉक स्टेटमेंट आते ही नहीं है, साल के एंड में आते हैं सब 12 महीने के साथ में. ऐसे कितने लोगों ने देखा है सब 12 महीने के स्टॉक स्टेटमेंट साथ में सबमिट होते हैं, मार्च में होते हैं ना, नहीं होते? या अनबिलीवेबल है, एक भी केस आपको मिला नहीं कि साथ में सब स्टेटमेंट सबमिट नहीं हुए. हाँ, ये डेट अलग रहती है लेकिन वो बंच साथ में ही रखा रहता है, और कभी कभी तो ऐसे रखते हैं कि वो परफोरेशन भी नहीं निकालते, यानी लेटर हेड जो रहता है ना वो भी साथ में रहता है, चिपका हुआ रहता है वहाँ पे, यानी 12 अलग भी नहीं करते, साइन सेम रहता है, सब सेम रहता है. कौन सा डेट होना चाहिए इफेक्टिव डेट? 20 फर्स्ट. कितने बैंक के सीबीएस सिस्टम में फर्स्ट से इफेक्टिव होता है वो मुझे बताओ. फर्स्ट होता है वो मैं भी मानता हूं ना, दैट इज करेक्ट. कौन सी सीबीएस सिस्टम आपने देखी कि जो 20 को सबमिट किए स्टॉक स्टेटमेंट और इफेक्टिवनेस फर्स्ट से गया और इंटरेस्ट कैलकुलेशन फर्स्ट से किया? नहीं, जो ओवरड्यू कैलकुलेट करते हैं हम लोग, पेनल इंटरेस्ट और अभी उसको पेनल चार्जेस बोलते हैं, कितनी सीबीएस सिस्टम में? एक भी नहीं. और आपने सबने सर्टिफिकेट दिया है लास्ट ईयर, सिस्टम बेस एनपीए, सिस्टम बेस आईरैक नॉर्म, इंटरेस्ट कैलकुलेशन सब बराबर हो रहा है, राइट? अभी थोड़ा और आपको थोड़ा पिंचिंग लगेगा ऐसे क्वेश्चन पूछता हूं. इंटरेस्ट कैलकुलेशन आप में से कितने लोगों को कॉन्फिडेंस है कि आपको आता है? एक नहीं हाथ, सेम आदमी वापस हाथ ऊपर कर रहे हैं, यानी मेरा काउंटिंग 1 का 2 नहीं होने वाला, 1 ही होने वाला है, 2. बाकी कोई नहीं करता इंटरेस्ट कैलकुलेशन. ओके, क्या मेथड है इंटरेस्ट कैलकुलेशन की? डेली प्रोडक्ट, ये सब लोग एक्सेप्ट करते हैं ना. फ्रीक्वेंसी क्या रहती है? मंथली या क्वार्टरली? मंथली, क्वार्टरली हो सकती है, नहीं हो सकती है? हो सकती है, नहीं. मैं 2 आपको चीज पूछता हूं. एग्रीकल्चर लोन में क्या फ्रीक्वेंसी रहती है? 6 मंथ. कहां पे लिखा है ऐसे 6 मंथ? बैंकिंग प्रैक्टिस. वो 6 मंथ नहीं है, वो एक्चुअली ड्यू के लिए क्रॉप सीजन का पैटर्न है, 6 मंथ्स भी नहीं है. यानी मंथली आ सकता है बैंक के, यानी अकाउंट में मंथली आ सकता है, बट दैट इज नॉट ड्यू. सो इट इज एक्रूड बट नॉट ड्यू फॉर मंथली. और वो ड्यू हो जाता है जब भी क्रॉप सीजन खत्म होता है तभी. आपने मंथली सब नहीं बोला ना. मुझे एक बता दो, बिल डिस्काउंटिंग में कैसे होता है इंटरेस्ट कैलकुलेशन? मंथली होता है या कैसे होता है? अपफ्रंट होता है वो. बिल डिस्काउंटिंग में हम लोग इंटरेस्ट काट के देते हैं ना, तो उसका इफेक्टिव रेट कितना रहता है? उल्टा कैलकुलेट करते हैं या ग्रॉस के ऊपर कैलकुलेट करते हैं? यानी मनी लेंडर का जैसे रहता है ना कि इंटरेस्ट काट के ही देना है पहले. जैसे 100 रुपए का बिल डिस्काउंटिंग है, 9% रेट ऑफ इंटरेस्ट है, तो अगर मैंने उसके ऊपर 1 साल का ऐसे प्रिज्यूम करके चलो तो कैलकुलेशन के लिए आसान है. बिल डिस्काउंटिंग तो 1 साल नहीं रहता है, तो भी प्रिज्यूम करो. तो मैं क्या करूंगा एज अ बैंकर, मैं उसको 91 ही दे दूंगा, 9 रुपए मैं अपफ्रंट ले लूंगा, राइट? किसमें ये बैठता है 9%? क्योंकि मैंने तो 91 रुपीज ही लिए, तो मैंने कितना इंटरेस्ट लिया? 9 रुपीज और 91, तो रेट ऑफ इंटरेस्ट ज़्यादा हो गया. अभी इसमें फ्लॉ कौन सा है? नॉर्मल इसमें हम लोग मंथली इंटरेस्ट लगाते हैं, इसमें लमसम इंटरेस्ट लेते हैं, जैसे 90 डेज का है तो 90 डेज का जो भी कैलकुलेट हुआ वो अपफ्रंट लेते हैं। अभी ऑडिटर को क्या देखना चाहिए कि बैंक के पॉलिसी में क्या लिखा है, क्योंकि जो इंटरेस्ट ऑन एडवांसेस है वो बैंक के ऊपर है, बैंक डिफाइन कर सकती है, लेकिन वो कॉन्ट्रेक्चुअल ऑब्लिगेशन होना चाहिए। सेम पेनल चार्जेस का भी है, बैंक ने डिफाइन करना है कि क्या क्या फ्लॉज रहेंगे तो पेनल चार्जेस लगने वाले, यानी पेनल इंटरेस्ट पहले जो बोलते थे वो, जैसे नॉन सबमिशन ऑफ स्टॉक स्टेटमेंट को क्या है, ओवर ड्रॉइंग के लिए कितना है, सपोज सिक्योरिटी यानी चार्ज क्रिएशन नहीं किया तो कितना लगता है, और उसके लिए अपर कैप भी रहता है, जैसे यूजुअली रहता है मैक्सिमम 2%। तो जो नोटोरियस बोरो रहता है वो क्या बोलता है, गलती 4 जगह पे की है ना तो भी 2% ही लगने वाला है, तो चलने दो। वैसे स्टॉक स्टेटमेंट भी सबमिट नहीं किया, ओवर ड्रॉन भी हुआ, डॉक्यूमेंटेशन भी पूरा नहीं किया, चार्ज क्रिएशन भी बाकी है, तो आइडियली 4% लगना चाहिए, लेकिन अपर कैप 2% का है तो 2% लगता है। एज अ ऑडिटर यू नीड टू बी लिटिल केयरफुल अबाउट सच अकाउंट्स, जो है ना उसके वो छत के ऊपर जाते हैं ना 2% के, दैट यू नीड टू बी लिटिल केयरफुल अबाउट। और एक क्वेश्चन पूछता हूँ, मार्च का जो स्टॉक स्टेटमेंट रहता है और ऑडिटेड जो रिजल्ट्स रहते हैं वहाँ पे वैरिएंस आता है, तो कैसे डील करना चाहिए? पहले ऑडिटर्स को पूछता हूँ, उसके बाद जो भी बैंकर्स है वो मुझे बताओ। पहले मुझे ये बताओ कितने ऑडिटर्स ने पॉइंट रेज किया? 1 2, सब लोगों ने किया है रेज किया, लेकिन एलएफएआर का पॉइंट रेज किया या डीपी बदला, रिकैलकुलेट किया? डीपी नहीं किया या एलएफएआर में लिखा कि करना चाहिए? एलएफएआर का पॉइंट था सबका। अभी मुझे एक बता दो, अगर डीपी मेरा स्टॉक स्टेटमेंट से 2 करोड़ है और ऑडिटेड फाइनेंशियल स्टेटमेंट से 50 लाख है, तो ये एलएफएआर का पॉइंट अगर मैं करूंगा तो मेरी ऑडिटर करके क्या जिम्मेदारी है? समझो कि आपका क्यूआर भी केस बन गया, क्यूआर भी बताएंगे तो कैसे ने सब अलर्ट हो जाते हैं, सब सीए, आई कैन मेक आउट डिस्टिंक्शन बिटवीन कौन बैंकर है कौन सीए, प्रॉब्लम आ जाएगा। मैं आपको एक ही सर्कुलर का रेफरेंस देता हूँ, यूसेज यू हैव टू डिसाइड। आपका जो फ्रॉड रिस्क मैनेजमेंट का सर्कुलर है उसमें कोई भी फॉल्सिफिकेशन ऑफ डॉक्यूमेंट अगर रहेगा तो वो फ्रॉड करके कहलाता है। सबमिशन ऑफ रॉन्ग स्टॉक स्टेटमेंट इज फॉल्सिफिकेशन ऑफ फैक्चुअल थिंग्स। एनी फॉल्सिफिकेशन डॉक्यूमेंट विदाउट एनी क्लैरिफिकेशन, जैसे कैलकुलेशन एरर होगी, फॉर एग्जांपल जेन्युइन केस देखते हैं, मार्च में मैंने गलत स्टॉक स्टेटमेंट सबमिट किया, मेरा कैलकुलेशन एरर है, ऑडिटर ने मुझे अगस्त में दिखाया कि कैलकुलेशन एरर है, ऑडिटेड में रेक्टिफाई करते हैं। मैंने खुद ने सेल्फ रेक्टिफाई किया सितंबर स्टॉक स्टेटमेंट में कि मेरा 2 करोड़ का था, 1.5 करोड़ का गलती था, 1.5 करोड़ से कम किया, सितंबर से आगे मैंने करेक्ट पोजीशन लिए। दैट इज अ जेन्युइन केस। ये जहां पे भी नहीं है तभी आप फ्रॉड रिस्क मैनेजमेंट का सर्कुलर इन्वोक कर सकते हो, कभी करना है वो आपके ऊपर है। तो जहां पे भी डेविएशन सब्सटेंशियल है, मटेरियल है, वहां पे थोड़ा ध्यान देना, क्योंकि कल उठ के अगर वो अकाउंट एनपीए हो गया तो पहले आपको पूछेंगे आपको कैसे नहीं समझा मार्च और इसका डिफरेंस। स्टाफ अकाउंटेबिलिटी तो बात की रहती। और एक केस बताता हूँ, आपने सबने फ्रॉड रिस्क मैनेजमेंट के सर्कुलर पढ़े लास्ट ईयर के नवंबर और उसके पहले के, उसमें एक बड़ा चेंज हुआ था उसके पहले वाले सर्कुलर में, और वो जो कंटिन्यू हुआ है। पहले कैसा था, स्टाफ अकाउंटेबिलिटी टिपिकली अकाउंट एनपीए मार्क होता है तभी होता था कि इसमें कुछ स्टाफ अकाउंटेबिलिटी एंगल है या नहीं। अभी जो नया फ्रेमवर्क है फ्रॉड रिस्क मैनेजमेंट का, उसमें पीरियोडिकली सब एनपीए का वापस स्टाफ अकाउंटेबिलिटी एस्पेक्ट देखना है। पीरियोडिसिटी बैंक डिसाइड कर सकती है मटेरियलिटी एंगल से, लेकिन एक बार एनपीए हो गया तभी नहीं मिला छोड़ दिया ऐसा नहीं है, वापस वो रिविजिट करना, बिकॉज न्यू फैक्ट्स कैन बी सरफेसिंग। सो जस्ट कीप दिस थिंग्स इन माइंड। और एक चीज पूछता हूं आपको, समझो एक अकाउंट है, हम लोग लास्ट क्वार्टर में देख रहे हैं 1 जनवरी टिल 31 मार्च, उसमें से 80 डेज वो अकाउंट क्रेडिट में है, एडवर्स बैलेंस है। लास्ट जो 10 दिन है उसमें वो बैलेंस डेबिट हो गया और क्रेडिट एक भी नहीं है अकाउंट में, यानी पहले से ही वो क्रेडिट बैलेंस चलता आ रहा है। फॉर एग्जाम्पल से 5000 रुपीज़ क्रेडिट बैलेंस है, बाद में 7000 रुपये का चेक इशू किया, अभी 2000 रुपया डेबिट आ गया 20 मार्च से लेके 31 मार्च तक। अकाउंट पीए है या एनपीए? टेक्निकली एनपीए या नहीं, ये सोचना पड़ेगा। वापस बताता हूँ, 1 जनवरी से लेके 19 मार्च तक 5,000 क्रेडिट बैलेंस है, एडवर्स बैलेंस। 20 मार्च को 7,000 रुपीज़ का चेक पास हो गया, अभी 2,000 रुपये डेबिट बैलेंस है। 20 मार्च से लेके 31 मार्च तक एक भी क्रेडिट एंट्री नहीं है। ऐसे हो तो सकता है। सो टेक्निकली द अकाउंट हैज टू बी मार्क्ड एज एनपीए, क्योंकि वहां पे कहाँ पे भी ऐसा लिखा नहीं है कि सब दिन में मेरा जो बैलेंस है वो डेबिट या क्रेडिट रहना चाहिए। देयर इज नो कंडीशन। सो ऑन टेक्निकल ग्राउंड द अकाउंट माइट टर्न इनटू एनपीए। बी विजिलेंट अबाउट सिस्टम बेस्ड एनपीए, whether such instances are captured or not. Trade creditors का I am only reiterating that part. Trade creditors are required to be reduced. There is no question about that. तो book debts और एक book debts का एक problem है UCBs को. Probably most of you should be aware about that कि book debts above 90 days अगर बैंक ने फाइनेंस किए तो वो अनसिक्योर्ड एडवांस हो जाता है, और ये कंडीशन खाली यूसीबी के लिए। दिस कंडीशन डजंट अप्लाई टू कमर्शियल बैंक्स। कमर्शियल बैंक्स कैन लेंड फॉर एनी एज, जैसे अप टू 180 days also they can lend. UCBs there is a condition. Book debts up to 90 days are considered for security, above 90 days it's unsecured. अभी जहाँ पे भी ऐसे हुआ है कि सैंक्शन टर्म भी 120 days का है, आपको क्या देखना है कि अनसिक्योर्ड लोन का जो कंपोनेंट है वो कहाँ पे एक्सीड नहीं हुआ है ना, डिपेंडिंग अपॉन ग्रेड ऑफ योर बैंक, बिकॉज फॉर टायर 3 and 4 इट इज 5 lakhs. तो आपको ये देखना है कि सिक्योर्ड अनसिक्योर्ड कॉम्पोजिशन चेंज नहीं हो रहा है. ये जस्ट एक एग्जाम्पल है, सिमिलर एग्जाम्पल कि दिस इज लास्ट क्वार्टर. सो टोटल रिसीट्स आर 2,000, total interest which is debited in the account is 3,000. So naturally the account will turn into NPA because credit summation is less than interest debited. Once the account is marked as NPA, fallout is that you need to calculate unrealized interest. तो यहाँ पे unrealized interest कितना है? 3,000, because 2,000 is earlier credit. So 3,000 rupees interest will get derecognized. Now in some CBS system, they calculate unrealized interest as 1,000 only. So you have to test the system as to whether unrealized component is correctly calculated or not. Simple litmus test है, subsequent credit रहेगा तो ये realize होता है, earlier credit से कुछ realize नहीं होता है. So that is a simple parameter for considering whether it is realized or unrealized. Then accounts with temporary deficiency. There are two types of temporary deficiencies which are defined. One is non-submission of stock statement. Second one is non-renewal cases. Non-submission of stock statement में एक leverage RBI ने दिया है. See, wherever stock statement is submitted, that DP can be used for next 3 months. So suppose September stock statement is there, I can use that DP for October, November, December. From January DP won't be there. But this facility is available only for large borrower accounts. And large borrower is not defined by RBI. So the bank has to define. So all materiality angles which bank probably tells you for dropping a NP account will apply. See, sometimes कभी-कभी बैंक बोलती है ना ऑडिटर्स को कि 25 लाख का है ना, आप छोड़ दो, वो बड़ा नहीं है, बैंक मेरा 500 करोड़ का है, 500 करोड़ में 25 लाख से क्या फर्क पड़ने वाला है, कुछ नहीं फर्क पड़ेगा. So same yardstick should be applied over here. What is really large? बाकी सब अदर देन लार्ज अकाउंट है, उसके लिए एक्सटेंशन नहीं है. तो सितंबर स्टॉक स्टेटमेंट डीपी कैन बी यूज ओनली फॉर अक्टूबर. उसके बाद नवंबर, दिसंबर, जनवरी डीपी वोंट बी अवेलेबल, द अकाउंट विल टर्न इनटू एनपीए. सो दिस इज फर्स्ट कंडीशन. सेकंड वन इज नॉन रिन्यूअल केसेस. सो इफ द अकाउंट इज नॉट रिन्यूड विद इन 90 days, इफ द रेगुलर रिन्यूअल डजंट टेक प्लेस, द अकाउंट टर्न्स इनटू एनपीए. यहाँ पे एक ध्यान में रखना, फॉर ऑडिटर्स एक्चुअली, फॉर कमर्शियल बैंक दिस इज 180 days. फॉर UCBs इट इज़ 90 days. तो आपको 10 अप्रैल और 12 अप्रैल के बाद में थोड़ा चेंज करना है, अपग्रेड वर्जन या पहले का वर्जन वापस डालना है कि नॉन रिन्यूअल के लिए 90 days है, 180 नहीं, क्योंकि वहाँ पे आप 180 तक छोड़ के आए रहेंगे और यहाँ पे आपको 90 के बाद ही पकड़ना है. अभी इसमें CBS टेस्ट करो कि व्हाट काइंड ऑफ कंट्रोल मैकेनिज्म इज देयर. उसमें सिंपल चीज़ बता दो, अकाउंट से रिन्यूड ड्यूरिंग द ईयर का लिस्ट निकालो और पीरियड निकालो. टिपिकली शॉर्ट रिव्यूज रहता है, वो 3 महीने का रहता है. सो फ्रॉम दैट लिस्ट ऑल्सो यू कैन कम टू नो वेदर रेगुलर रिन्यूअल इज देयर और वेदर इट इज अ शॉर्ट रिन्यूअल. and pull out those instances. Exceptions, if any loan is sanctioned against NACs, IVPs, KVPs, bank FDs, life insurance policies, and where balance is less than security value, the account will be always standard. The moment it exceeds that security value, normal norms will be applicable. Second thing is that as far as gold ornaments and other government securities are concerned, there is no exemption. Normal norms are applicable. But for gold loan, there is additional norm. You have to maintain the LTV ratio, depending upon the exposure which you have taken. So up to 2.5 lakhs, it is 85. 2.5 to 5, it is 80. Above 5, it is 75. So you need to ensure that how that LTV is captured, because it has to be ongoing process. And based on that, additional criteria is required to be inbuilt. Central government guaranteed account, those are not required to be marked as NPA. State government guaranteed accounts, normal norms are applicable. Borrower-wise classification norms are there with two exceptions. First one is advance given to PACs or self-help group. In that case, underlying advances are required to be tested. So the entire facility may not turn into NPA. Some portion of that might turn into NPA. But data should be available with the bank. Second is LC/BD. So suppose LC discounting facility is given and LC belongs to other bank. Then that exposure is on that bank, not on the on the borrower. So borrower might have term loan CC as NPA, LC/BD might be PA. So UCIC concept is already challenged. So few accounts might be PA, few accounts might be NPA. What you need to verify is that as far as LC/BD facilities are concerned, whether that LC is accepted by the other bank or not. And second thing is that on the due date, whether the amount is paid back by that particular bank to your bank or not. Because LC/BD typically should not be overdue also. Normal clean supply of bills, that is possible, wherein it is not backed by LC. Then as far as consortium advances are concerned, individual member bank has to decide. So it might happen that out of 5 banks, 3 banks are marking that as NPA, 2 banks might mark it as a performing account. Straight away classification norms, 2 norms are there. One is wherein there is a erosion in value beyond 50% as compared to last valuation. Now in this case, only substandard account will turn into doubtful asset category. So if you have a performing account wherein there is a erosion, you need not have to mark that account as doubtful asset category unless and until you are having a doubt about fraudulent activities which have been undertaken. So suppose there is a inflated valuation, which was intentionally done. And if you are sure that it is going to lead to fraudulent activity, you can mark that account as a fraud account. But it is not automated process wherein your standard account will turn into doubtful asset category. But if it is substandard, it has to be instantly, should be elevated to doubtful asset category. Then in case of secured loans, if your security value is less than 10% of your outstanding balance, then the account will turn into NPA. This norm will apply only for secured loans. Now how to distinguish between secured and unsecured? The criteria is that at the time of sanction of limit, if your underlying security was more than 10% of sanction limit, that account is called as secured loan. Now for UCB, there is one more guideline. For salary loans, wherein, I don't know the section in Gujarat State Cooperative Act, in Maharashtra it is section 49. Wherein you can attach the salary, with the employer. I think it might be 50 or 51. Because it's only one section here and there, which is there. Now for salary loans, the moment you take an undertaking under that section, that loan has to be classified as a secured loan. But when such loan turns into NPA, you don't have to classify that as a loss asset. It will be substandard only. So in classification for UCBs, yardsticks are different. For salary loans, even though there is no underlying security, it has to be called as secured. Now let me tell you one loophole. And for bankers over here, I don't want you to use that loophole. Let me tell you what is that loophole. So let's presume that you are tier 3, tier 4 bank. So unsecured loan criteria is 5 lakhs. Now suppose I want to flout that criteria. What I should do? I should give a secured loan in the form of salary loan. So I can even give 20 lakhs loan. Because technically it is secured, practically it is unsecured. But RBI only says that it has to be treated as secured loan. So I get out of that 5 lakh limit. But again to repeat, this loophole is not supposed to be used. Why I am telling you all these loopholes is not to use those loopholes, but to avoid using those loopholes. So just keep this thing in mind. And when you present the balance sheet for advances, secured, unsecured classification will undergo change. So salary loan has to go there and not under unsecured category. But when you say that it is a substandard, it will have only 10% provision, not 100% provision like a loss asset. So that's the interplay between NPA norms and secured, unsecured classification norms. You only give me the answer. So let's presume I am a likely defaulter, and there is some old, book dates, maybe outstanding for more than 2 years, which are suddenly realized. Maybe a government contract dues which have got released, or maybe a legal case which is going on. Now the case is in my favor, I have received the amount. Account is regularized. Is it a genuine fund? It's a genuine source, right? So this is one example. Let me give you a second example. Suppose I am a defaulter, and to regularize the account, I sell off one of the properties of my entity. Amount is realized, I have sold off the property. Is it a genuine source of fund? Yes or no? Or in between? Bank को जैसे चाहिए वैसे. So it cannot be called a genuine source of fund. There is no income source. You are selling of yourself actually and saying that I am a performing asset. Let me give you a third case. Suppose the example which I have already given you. Suppose there is a FD. I encash the FD. That is not genuine source. Now where the materiality will exist, you need to see that how much material amount is fetched out of those FDs, or maybe by sale of asset. If it is an immaterial amount and I am just going to regularize a particular thing because on a particular day my book dates are increasing, there is a liquidity crunch in the market, then it's fine. I can encash my investment and I can say that I have regularized my account. But throughout the year, I need to see the account operation. If I am satisfied as an auditor, I can leave it. Now, who should really prove that whether there is an inherent weakness or not? The onus is on the banker, not on the auditor. Auditor can raise a flag, ask the bank to represent before them as to on what basis they are saying that there is no inherent weakness. So the justification has to be drafted. How the bank should draft the justification? They need to give a demonstration that for 12 months, what kind of business transactions were routed through that account. And they have to prove that the last quarter was one-off case. Now that's where the banker's expertise will be applicable. Another thing which you can do is that you can ask for GST returns, prove that the genuine business activities were there, which are related to the business activities which were declared. Both should sync. Means my declared activity is manufacturing and I am providing services. That should not happen, because then jailing of my declaration in GST and in reality will not match. Another thing is that you need to also verify the subsequent operations in the account till the time you are signing the balance sheet in an adverse way. So subsequent realization, subsequent regularization will not help. But if subsequently the account is regularized for one day and later on again, the overdrawing is allowed, it's a typical case of inherent weakness. Bringing the account within limit on 89th day, again from 91st day the account is overdrawn. That's not the genuine regularization of the account. Mandatory valuation, the cap for cooperative banks is 10 lakhs. So if any NP exposure is above 10 lakhs, once in a year annual stock audit is required. In case if you happen to have stock and book dates taken as a security, and for immovable property, it's once in a year. Now what if the valuation is not carried out? It will be typically the auditor's discretion to decide as to what kind of valuation should be applicable for that particular case. The reason being, if in the last 3 years, if no one has visited the property, there is a possibility that property might be in depleted condition or there might be encroachment also. So the auditor has to take a call on case-to-case basis. It's purely his discretion if in last 3 years valuation is not carried out. What the banker can do at the most is, even after 31st March, they can carry out the valuation, prove before the auditor that there is a genuine case that there is a delay in valuation. So once valuation report is received, even if after 31st of March, it can prove on the record that the valuation existed on 31st March, maybe with a slight discount or something. So that is a way out or a remedy, against such instances wherein in last 3 years valuation was not carried out and the auditor is flagging this issue after March end. Some common lapses actually. Many a times the calculation of overdues may not be correct. So acquaint yourself with the CBS vendors logic that should gel with the bankers as well as with the auditors as to whether the overdue calculation is correct or not. One litmus test is that just go to the last installment, see that the last installment is also same. There is no ballooning of last installment which has occurred, because sometimes there are few innovative CBS system vendors are there who allow the banks to change the composition of EMI also without calling it as a restructuring process. So wherever there is a delay in repayment of installments, sometimes the CBS undergoes a change. And the reference point which I am giving over here is topmost 2 softwares in India which are having these lacunas. So just revisit the overdue concept and see that whether correct concepts are applicable or not. Partial recoveries, subsequent recoveries, RBI is very clear on that. Wherever there is an inconsistency in order of recovery, typically in case of NPAs, the auditor should be verifying that thoroughly, because the order of recovery can be decided by the bank, but consistency has to be maintained. So suppose the bank says that first I will recover principal, then interest, then charges. If that is a policy, it should get disclosed in notes on accounts and then it should be followed. Now this discretion is available only for NPAs, not for PAs. So PAs normal realization concept will be applicable. Then in case of project loans, as far as project loans are concerned, a simple definition of project loan is that whenever any funding is given for setting up of an economic venture, that will be called as a project loan. Typical example is maybe a hospital project, maybe a hotel project, maybe a power generation plant, any manufacturing setup, that can be a project loan. Now what is the precondition? As far as project loan is concerned, DCCO is required to be defined at the time of sanction of loan, or at the time of closure means documentation closure of that particular loan. DCCO has to be achieved, and if it is not achieved, it will tantamount to a lacuna in that particular loan, and the loan will turn into NPA. Now typically project loans can be infra and non-infra. Now there are couple of relaxations which RBI has given. For infrastructure loans, you can extend the DCCO to the extent of 3 years, and for non-infra, you can extend to the extent of 2 years. That application has to be initiated by the borrower, not by the bank. Now whenever the application is received, reappraisal will be done by the bank, and to the extent of that extension of DCCO, the repayment schedule can also be postponed without diluting the asset classification. So the standard account will remain into standard asset category. The earlier norms about this 3 and 2, that has undergone a change with effect from 1st October 2025. So prior to that, earlier norms are applicable. October 25 onwards, new norms are becoming applicable. Cost overruns can be funded to the extent of 10%. It can be pre-sanction limit, or it can be later on, additional sanction limits also. Still, it will not be called as a restructuring process. If there is a change in scope and size of the project beyond 25%, the entire project loan can be restructured, but that will be once in a lifetime. Now what does this mean? So suppose my initial project cost is 10 crores. If my project cost is going beyond 25% additionally, not as a cost overrun, but maybe technology change. I am adopting a different technology so that my capacity is going to increase. Now my new project cost is 13 crores. So it is more than 25%, I can restructure the entire loan. Or there can be a change in size. The change in size means maybe earlier my capacity was 1 lakh units per day. Now my new capacity is say 1.5 lakh units per day. So my size is increased beyond 25%, I can restructure the entire loan without downgrading that particular account. Now let's come to income recognition part. As far as NPA accounts are concerned, income will be always recognized on the realization basis. All of you agree with this statement? So banks are following a hybrid system. So for normal performing accounts, it's on accrual basis, and for NPAs it is on cash basis. Is it a hybrid system? Okay, let me ask you another question. Is a hybrid system allowed? Not allowed? Just refer to Accounting Standard 9. it talks about these instances. See, wherever any income is, even though it is accrued, but there is no certainty of realization, you should not recognize the income under accrual principle only. So for NPAs, why we don't recognize the income? The reason is that these are bad loans, so there is no certainty. So the principle is accrual. But since there is no certainty, I will recognize it on a realization basis. So improvise on notes on accounts which are given. Don't say that it's one is realization, one is accrual. That will be challenge the fundamental principle of not having a hybrid system. Let me give a second example, not related to advances. As far as locker rents are concerned, in many banks locker rent is recognized on cash basis. Even that is a hybrid system. So it's non-compliance of accounting standard, irrespective of materiality aspect. And secondly, as far as GST compliance is concerned, locker rent has to be paid on accrual basis. So just verify how the banks are matching these principles. Because GST has to be paid on accrual. So it's likelihood that GST is not paid. So just go back and verify that how GST compliance is taken care of. Reversal we already talked about. We'll just talk about accounting of non-banking assets and security receipts. So as far as non-banking assets are concerned, wherever the bank is acquiring an asset in satisfaction of claim, transferring the title in their name along with risk and rewards. So two things are required: payment of stamp duty and registration of that property should be in the bank's name. A mere title transfer will not amount to non-banking asset. And only immovable properties can be obtained as a non-banking asset. So movable property, bank is prohibited from acquiring. Now whenever non-banking asset is acquired, it will be always at net book value. So ledger balance minus BDDR will be the value of non-banking asset, and IROR should be extinguishing. Similarly, for security receipts, wherever the NPAs are sold off to ARCs, on the date of selling of those NPAs to ARCs, the net book value will be the value at which SR should be accounted for. So net book value or face value of security, that is SR, whichever is lower will be the accounting methodology. Order of recovery, as I said, it will depend upon the bank. Typically, most of the banks follow a system wherein first unrealized expense is realized, then interest, then principal. But again, it will entirely depend upon the bank. Few banks have a concept that for substandard, this logic is applied. For doubtful, they first recover the principal, then charges, then interest. But whatever is the order of recovery is there, that should be disclosed and it should be consistently followed by that particular bank. Asset classification norms, standard, substandard, loss asset, we already discussed. So D1 will be for 1 year after substandard, D2 will be for 2 years, then it will turn into D3 category. As far as provisioning is concerned, nothing has changed. Same provisioning norms are there, only master circular is becoming master direction. As far as provisioning for doubtful asset is concerned, same way. For secured portion for D1 it is 20%, D2 it is 30%, and D3 it is 100%. For unsecured, it was always 100%. Loss asset, you should provide 100%. ECGC cover, if it is there, then you have to make a provision excluding ECGC cover. Now let's come to the restructuring part. As far as the restructuring part is concerned, UCBs are having completely different guidelines as compared to commercial banks. Few things are common, few things are totally different. So first thing is that let's talk about which loans can be restructured. So technically any loan can be restructured. The restructuring is not possible in two counts. One is that retrospective restructuring is not allowed. And secondly, any account which is involved in fraud, such accounts are not supposed to be restructured. Otherwise, you can restructure the account at any stage. Before commencement of production, after commencement of production, in between, when the loan turns into NPA, at any, life stage, you can restructure the account. There is no bar on that. Now, as far as asset classification norms are concerned, in normal cases, the account has to be downgraded. The moment you give any concession to the borrower in terms of deferment of principal repayment or in terms of interest concession on on one-to-one cases, not in groups, then in that case it is called as restructuring. So immediately you have to downgrade. So if it is standard, it will become substandard. If it is substandard, it will go to doubtful asset category. So that is as far as normal restructuring process is concerned. barring the cases of project loans wherein DCCO extension is permitted. So those cases are out of the restructuring process. Now there is a satisfactory performance criteria which is defined, which is different from non-agricultural CC, non-agricultural term loan and agricultural loan. Now if you look at it, the satisfactory performance criteria for agricultural loan is comparatively lenient. At the end of 1 year, there should not be any overdue. That's all. Now what is a specified period? It will be 1 year period from the first date when under the restructuring first amount is paid, either interest or principal. So from that 1 year is the period. Within 1 year for non-agricultural CC, that should never be out of order. At the end it should be within the limit. Same way for non-agriculture term loan, it should never be a non-performing account. Overdue is fine. Up to 2, up to 3 installment is fine. At the end of the tenure of that specified period, it should be regularized. No overdue should be there. If that is the case, account will get upgraded. Now how the bank can use it? Suppose the account is substandard. So anyway it has gone into NPA. What the bank should do for genuine borrowers, they should permit him to restructure the loan, and within 1 year the account will get upgraded. Now let me tell you, where that, not a loophole actually, but practical banking can exist. See, there is no bar on how to restructure a loan. If I am a banker, I want to save the bank, I will do a restructuring in a ballooning way. So initially the installments are of a lower value, gradually they will be stepping up. So initially the burden is low for first 1 year. Account turns into PA. And then maybe, again it might, fall back. Now all these things again, they are within the regulatory framework. And as I said, I had given disclaimer in my second slide. All are my personal views. No professional advice is given. So you should know the tricks of the trade. I am sure that the bankers over here, they are well aware about all these things. I am just making auditors also aware about that. Because, typically auditors are very straightforward. Am I right? The bankers may not agree on that. एकदम सीधे साधे रहते सब ऑडिटर. बराबर है ना? ऑडिटर्स को डाउट हो गया अभी ये स्टेटमेंट में. Now provisioning requirement, normal provisioning norms are applicable. You need to ensure that it's never exceeding 100% beyond the outstanding balance. Now sacrifice is still calculatable for UCBs. Sacrifice calculation is no more there with scheduled commercial banks. Sacrifice is difference between your original repayment schedule, new repayment schedule, and arriving at present value. Applying the interest which is applicable under the restructuring process. So you have to just have two cash flows, calculate value, present value using DCF method. If there is an adversity, you have to provide. And every year end, you have to revisit that and the balance will still continue. Now including this sacrifice amount plus provisioning amount, you should be within 100% cap. You should not go beyond 100%. So that is a condition which has been stipulated. Now what is the benefit for UCBs? Special regulatory treatment still persists. Now what is that? A normal loan, excluding this consumer loans, personal advances, a normal business loan, typically, the borrower can apply to the bank for restructuring. Bank can process that within 90 days. And if entire process is completed within 90 days, you can retain the class of asset without downgrading. And this is available only once. You cannot have a repetitive kind of a restructuring process. This incentive is not there for commercial banks. So 90 days is a norm and few other conditions are there. So these are just conditions actually which should be fulfilled, like fully secured and other thing has to be there. Contribution has to be there, additional contribution has to be there from the promoter. What the bank should do actually, all these conditions, they should make a checklist. So the moment you receive the application, or to be more practical, whatever is the date of application which is written on the application form, from that within 90 days you have to close. I think you can read between the line what I said. Whatever is the date is there, which you show on the record that this is the date on which you have received the application form, from that within 90 days you have to close. And all these conditions, you should simply tick that each condition is fulfilled or not, and you can retain the class. Now let me tell you where the challenge is. Let me give you a case of project loan. So borrower has availed a project loan, DCCO is extended, maybe 2 years, so within the permitted years. accounts indirectly gets restructured. So that is first restructuring. Second can be special regulatory treatment during the lifetime of that project loan. And this is not called as second restructuring. The reason being, under project loan, they have specified that wherever DCCO is extended, it will not be called as a restructuring. So even though my repayment schedule has undergone a change, still it is not a restructuring process. So this restructuring process can be first. So two regulatory parameters can be fulfilled. One for extension of DCCO, second for quick implementation package through a special regulatory treatment. As far as the reporting of CRILC is concerned, banks which are having asset size beyond 500 crores, CRILC reporting is mandatory for all the exposures above 5 crores. So SMA 0, SMA 1, SMA 2 reporting is required to be there. As an auditor, you need to verify that whether SMA reporting is also correctly done or not. Interbank exposure, RBI has given some guideline. This guideline came in the background of PMC bank actually, that wherever a bank is under AID, and if a bank has taken LCBD exposure, 100% provision is required, but in a staggered form. So in next 5 years, that provision can be there. If unfortunately you are having deposit with such banks, then naturally this condition doesn't apply. Immediately, you have to replace it by 100% provision on investments. A few points actually, I have just jotted down few points. Almost all the points, we have discussed. Maybe one or two I would just want to touch upon. Be little careful about early mortality cases. These are the cases wherein account turns into NPA within 12 months from the date of sanction. These are the typical cases wherein vigilance angle has to be factored in. Staff accountability aspect has to be factored into that. And as far as auditors are concerned, you need to be very vigilant about the instances wherein there is a wrong accounting done. Wrong accounting, why I am saying is, I will give just 2 or 3 examples before I conclude this. I will give a very simple example of wrong accounting or wrong disclosures. There are few banks which specify interest receivable on standard asset as a separate line item. So usually what is expected is IR/OIR will be there as a contra item only for NPAs. Am I right? You cannot have IR on standard assets because the interest has to be capitalized. For all performing asset, you need to capitalize the interest. But there are some softwares which show IR as a different item. Now what is the challenge? There are a couple of softwares which follow a differential practice depending upon type of loan. So for CCOD they capitalize it. For term loan they show it as IR. Now there is no consistency in all these things, and the biggest challenge is in CRAR calculation. Because in CRAR calculation within IR you have to break it up. Some portion might be personal loan, some portion might be housing loan, some portion might be vehicle loan. So the risk weights are different. So verify that whether accounting wise advance related accounting is correct or not. And always apply your simple yardstick of logic. Forget about URCA. Whatever you have learned in 11th and 12th, that is more than sufficient as far as accounting is concerned. NPA norms are there, but accounting is primary thing. And always remember that CBSE is not developed by chartered accountants. So you need to test yourself as to whether you are able to rely on the CBSE system or not. And that reliance is something which according to me is a grey area. So if you are ready to issue a clean certificate about system-based NPA, think twice. I have yet to come across a software which has system-based NPA correctly calculated, and there is no deviation from IRAC norms as far as system-based NPA accounts are concerned. If you happen to come across any CBS system, please let me know. I am talking about all the softwares, not only related to UCB. And there are innovative ways of logic which are getting inbuilt. Be aware about those innovative ways of accounting, which one should not really do the accounting. Let me just give you a last example. I don't know whether few of you must be there on 10th when I was there, but let me just ask you one question. In how many banks you have pygmy accounts? Daily deposit schemes? Any bank is having? One. Okay, all of you are aware about pygmy scheme? It's a daily deposit scheme wherein pygmy agents are there who practically go to the depositor's place, they collect the amount, and nowadays actually everything is digitized, so the earlier flaws are not there, wherein pygmy collection agent used to collect the amount and maybe deposit after 7 days. So that is not the case now. I just want to, tell you one simple example as to why, when I am saying that 11th, 12th accounting and basic mathematics should be clear in your mind. So let's take an example of a pygmy, scheme, wherein say pygmy depositors are getting say 3% interest, and pygmy commission is say 2%. A standard, kind of a benchmark. I'm just taking a hypothetical example. And let's say 1 year is the typical scheme period. Can you tell me what can be the cost of deposit of pygmy deposit? 3% is say daily, daily product basis, paid annually to that particular deposit holder, that is interest. 2% is commission. What is the cost of deposit? All of you are aware about cost of deposit? So interest plus, such linked commission, that is the numerator, denominator is your average deposit, right? So can you tell me what is the cost of deposit of pygmy scheme? %? Or any other view? I am not going to ask any one of you to calculate the interest, so don't worry about that. Logically, how much you think? 5%? More than 10%. So what can be the highest one? 10%? 15%? Okay, let me show you how it can be more than 100%. I'll just give you a simple example. Let's presume that I am a pygmy agent. I am very notorious. Notorious in the sense I want to take, I want to use the loopholes. I will open a pygmy account with say 10,000 rupees daily collection. So for first 5 days, I have collected 10,000. I have religiously deposited that 10,000. So balance at the end of 5th day is 50,000. After that, the collection is stopped. I will again go to the bank just 1 week before the maturity of that particular scheme. Last week of that year, the scheme is yearly. I will deposit 5 lakh lump sum, or maybe say 1 lakh lump sum, let's take any amount. And that's it, then the account will be closed, after 1 week. So how much interest I will get? 3% on daily product basis. So initially on 50,000, that 10, 20, 30, like that. At the end, it might be say 10 lakhs lump sum which is deposited. So I get interest at 3%. So far, so good. Now let's come to the commission part. When I collect it in the last week, I will get 2% on 10 lakhs. And when I am going to get back that amount within 1 week, so in 1 week I am going to earn 2% commission. Now extrapolate that to 52 weeks. So 52 into 2, 104%. So forget about that interest component of 3%. I am going to get commission, returns in the form of commission, which can go beyond 100% also. So be little vigilant as a banker and as an auditor, that whether there is a possibility of loophole is there or not. And to be more specific, you need to be more, notorious than the fraudster. As an auditor, I am saying, not as a fraudster. Auditor can never become a fraudster. As I said, they are very straightforward, like all of us. But you need to know that where the loopholes are possible. So I just demonstrated you one simple example. So try to analyze the balance sheet and profit and loss account using your simple logics. That what can go wrong, how a product can be misused by the bank or maybe by the agent or maybe by DSA. Because something similar applies to DSAs also. They will open the account, within 6 months they will close the account. So commission is received, account gets closed. So anyway I earn more than the interest which is getting paid. So suppose interest rate is 9%. Within 6 months I close the account, DSA commission is say 4%. I am earning more than interest which I am paying. So such flaws should never exist. So as an auditor, try to inculcate the practice to understand that what can go wrong. And let me tell you, UCB stories are like Arabian Nights. I will never like to demean any UCB. And I will tell you the reason also very upfrontly. I have all my accounts in UCBs. So it's not that I am not advocating UCBs, but the way certain UCB or certain set of UCBs have behaved in such a way, that's why I said Arabian Nights, every night you can have another story. Let me tell you the last story, and then any questions are there, we can take up. All of you have seen New India case? How many of you followed New India case? What really happened? There was a 122 crores cash which was kind of stolen. Just look at their March 24 balance sheet. Go to the cash flow statement. I will tell you rough figures actually, and I want you to see the balance sheet just to understand that why logics have failed. So let's presume cash and bank balance is 160 crores. And if I ask you that it has two components, 10 crores and 150 crores, and divide the components into two parts. One is cash on hand, one is cash and bank. So where the 10 crores should belong? Cash on hand, logically, in that bank it was exactly opposite scenario. So 160 crores, out of 160 crores, 150 crores was cash on hand, 10 crores was cash at bank. Number of branches were less than 40. Now imagine a scenario, a bank with 40, say maybe 40 branches, having a cash on hand 150 crores. Shouldn't it raise alarms in the, in your means any auditors or regulators or bankers' mind? That didn't happen. Most of the frauds, if you see, they start with a smaller value. So apply your simple logic to understand that what can go wrong. And you need to be able to read the balance sheet and understand the balance sheet besides doing the audit. That what is the logical figure which can appear against a particular line item and which appears to be illogical item. Once you understand that, audit is a simpler exercise. So that's all from my end. Probably I might have stretched the session beyond the point. I just thought to share my practical experiences with you. There was nothing to demean UCBs and other things, or even to criticize the auditor. I just made you aware about certain lacunas. So thank you very much, and if any questions are there, we can take few questions.
So at the conclusion of this one-day seminar, I have privilege to propose vote of thanks to the sir, today's esteemed speaker and well-known faculty on the audit of cooperative banks. Sir has shared his vast experience and knowledge in nearly 2 hours, 2 hours of seminar. I thank sir for sharing his knowledge, and thank you all for attending this seminar. We are concluding this seminar.